Good morning, students. Welcome you all once again in the live virtual classes organized by Board of Studies of ICAI. So, good morning, Sanjay, Leela, Udandam, Priya, Chitra. Good morning, everyone. So, friends, today's topic is on Ind AS 1 presentation of financial statement. We started this topic in the last class. Today, we'll complete this topic. And, friends, as of now, we have understood that there are two kind of accounting standard, Ind AS and accounting standard, and we are learning Indian accounting standard, right? And as far as presentation of financial statement is concerned, the format, the presentation of the financial statement, the format of the financial statement is given under Schedule 3, right? Division 1, Division 2, and Division 3. So we are learning Division 2 to Schedule 3. Division 2 to Schedule 3 is Ind AS compliant Schedule 3 for the companies other than NBFC companies. And Division 1 is on AS compliant companies. Division 3 is on those Ind AS compliant companies who are NBFC companies, right? So for us, Division 2 is more relevant. Talking about the financial statement, Ind AS 1 talks about presentation of financial statement and Ind AS 7 talks about statement of cash flows. These two standards are relevant for the component of the financial statement, okay? So friends, then we discussed there are 5 components of the financial statement. Balance sheet. And balance sheet format is given under Schedule 3 and the guidance is also given under Ind AS 1. Ind AS does not provide format. It provides the presentation related guidance. Okay. Statement of profit and loss. Schedule 3 provides the format and Ind AS 1 also provides the guidance relating to the presentation. The statement of changes in equity. Schedule 3 provides the format. Which Schedule 3? Which Schedule 3? Good morning, Geet, Anushi, Pitambar. Good morning. Which Schedule 3? Division 2 to Schedule 3. Perfect. Division 2 to Schedule 3 provides the format of statement of changes in equity, P&L, balance sheet, and Ind AS 1 provides the guidance. Okay. Statement of cash flows. Neither Schedule 3 nor Ind AS 1, both of them does not provide any guidance or any format. Who provides the guidance relating to statement of cash flows? Ind AS 7 provides guidance relating to the statement of cash flows. Okay. Yes. Notes to accounts. Then in notes to accounts, of course, Schedule 3 is relevant and all Ind AS are relevant, right? Schedule 3 provides the disclosures in the notes to accounts and all Ind AS are relevant. For example, Schedule 3 gives you that you have to provide debtors aging, creditors aging, capital work in progress aging, right? Intangible asset under development. When you are dealing with stock of companies, then the disclosure relating to stock of companies, disclosure relating to promoters, all these aspects are given under Schedule 3 and all Ind AS. Why I'm saying all Ind AS? For example, you are doing actuarial related disclosure, actuarial report. Gratuity का आप disclosure करते हो ना? So that actuarial disclosure is required as per Ind AS 19. You are also doing disclosure relating to the related party. So Schedule 3 does not gives you what are the related party disclosures. Schedule 3 says you have to do the related party disclosure as per Ind AS 24, right? Segment reporting. Schedule 3 does not gives you any guidance relating to segment reporting. It says that you have to do the segment reporting related disclosure as per Ind AS 108. Okay. So these are kind of disclosure. Capital commitment, contingent liability. You need to refer Ind AS 37 as well as Schedule 3 also provides the guidance relating to the capital commitment and contingent liability. Okay. Then friends, we started formally with Ind AS 1. We discussed what is the agenda. This standard is presentation of financial statement. This standard talks about what are the purpose, what is the objective and scope, what are the component like balance sheet, P&L, statement of changes in equity, cash flow, notes to accounts. Then we discuss few definition. Then what is the overall consideration, the features and the structure and content we are going to discuss, right? So friends, this part we have covered. And you know, the most important part, we have also covered the third balance sheet. You remember third balance sheet? What is the third balance sheet? Third balance sheet. क्या होती है third balance sheet? Which period balance sheet is the third balance sheet? Good morning, Saminathan. Good morning, Ankit. Which period balance sheet is third balance sheet? And in what circumstances this third balance sheet is getting prepared? I have shown you ONGC balance sheet also.
Yes, sir. Good morning, sir. Sir, when there is a accounting policy changes retrospectively, and it makes that reclassification of the items, then we have to incorporate the third balance sheet, which is the prayer period, the 1st April.
Yes. So Chitra is saying, you're right, Saminathan. Chitra is saying opening balance sheet for the corresponding period. Very good. So it's a opening comparative period. Opening date is a third balance sheet. Third balance sheet is the opening balance sheet of the comparative period. If the comparative period is, for example, 23-24, FY 23-24, 1st April 23 is the third balance sheet, opening of the comparative period balance sheet. And when this balance sheet is going to be prepared, this balance sheet is going to be prepared as per Ind AS 1 and Ind AS 8 when the company has changed in accounting policy and the company has corrected the prior period errors. Okay. Sir, if Reliance, let's talk about Reliance. Reliance has a lakhs of crores of turnover. They have the profit of around 35,000 to 40,000 crores. Reliance accountant forgot to record an expense of rupees 2 crore. Okay, of rupees 2 crore. They forgot. So Reliance accountant forgot to record an expense of 2 crore, which is pertaining to financial year 2021. They are preparing their balance sheet for 25. Sanjay, tell me in this case, whether Reliance is required to give the third balance sheet, whether the Reliance is required to restate the comparative balance sheet, restate comparative P&L, restate comparative cash flow, and whether Reliance is required to provide all the disclosures which I have shown you in the ONGC balance sheet. Please tell me. The correction is relating to 2 crore rupees. Reliance is showing its number, rounding off its number in crores. They have 40,000 crore of profit. They have lakhs and crores of top line. Geet, would you like to attempt? Manish, would you like to attempt this question? Yes, Manish.
देखें तो वो 2021-22 में जो में ही उसकी इफेक्ट आएगी, उसके बाद के पीरियड में उसकी कोई इफेक्ट आएगी नहीं, तो मेरे हिसाब से नहीं आनी चाहिए।
सॉरी, मैं समझ नहीं पाया, आपने बोला नहीं आनी चाहिए। ओके ओके, Ankit is saying, sir, restated balance sheet required. Friends, in case of correction of error, right? So whenever there is a material impact, okay? If the error is material, then only third balance sheet is required and restatement is required. If the error is not material, then it is not an error. Okay. So Udandam is saying, sir, only if greater than 1% of revenue or 1 million. Udandam, this materiality threshold is given for the disclosure of income and expense in the notes to accounts, right? As per Schedule 3. Okay. So this is not the materiality. This materiality is given as per Schedule 3 for the purpose of disclosure separately. Okay. For example, if your company has printed visiting cards, or if your company has printed some, employee named stationery, and they have spent, they have spent huge amount, which is more than 1% of revenue or 10 lakh, whatever is higher. So it is beyond that. In that case, so earlier the company was spending very petty expenses for stationery. So they are clubbing it into other expenses, but now it is exceeding the threshold of 1% of revenue or 10 lakh, whichever is higher. And hence the company is required to disclose this printing and stationery expenses separately in the notes to accounts. So this 1% of revenue or 1 million, this is only for the purpose of disclosure of P&L item in the notes to accounts separately, right? So friends, always remember, if the error, impact of the error is material, then only disclosure of restated balance sheet, then only disclosure of third balance sheet and with the other disclosures in the notes to accounts are required to be made. If the error is not material, it is not an error. Sir, to kya hoga? What happened then? So in that case, if Reliance accountant or auditor got to know that, oh, this 2 crore pertains to 4 years back, but now they realize this money has to be paid, this expense has to be booked, so they will just book that expense as a current year expense. Okay, why? Because the error is not material. Is that clear? So this third balance sheet concept is only applicable when the impact of the errors are material. Okay.
So, sir, one doubt. The materiality will be fixed by the entity level and they will record under the accounting policy. Based
Yes.
on they will record it.
Yes. So materiality, what happens? So the company prepare a document regarding the materiality in consultation with the auditor, because the materiality concept is given under the audit also. When you go for an audit, you can't do audit of every transaction. Do you agree with me?
Yes, sir.
So the company is preparing the financial statement for entire year, ek saal ka, right? Just don't think about proprietorship firm or small firm. Let's say you are around 12 students, 11 or 12 students have joined on Zoom. So all of you formed a team and went for an audit of Reliance Industries. Will you be able to audit in 1 month for the entire 1 year transaction? Answer is right. It's a huge, it's a C, right? So friends, what you do the sampling on the basis of audit methodology, which is based on the materiality, right? So companies are drafting their materiality policy. Like, what could be that materiality policy? Materiality policy could be, for example, 0.5% of PBT, profit before tax. For example, 0.25% of the total of the balance sheet. Okay. For example, 0.1% of revenue from operations. So these are kind of the guidance which the company used to follow for finalization of a materiality, that what is material, what is not material. Okay. And आप materiality को कैसे सोचते हो? For example, if you have 500 rupees, okay, और आपकी जेब से वो 500 rupees चोरी हो जाए या खो जाए, will it impact you or not? It will impact you. Yes, you will get tensed. But you have 10 rupee note and 10 rupee का नोट आपका खो गया, then will you go tensed? Will it impact you? Yes or no? 10 rupee probably will not impact you, but 500 rupee probably will impact you. Impact you, I mean to say, you get tensed, right? So that will impact you, correct? So
yes, sir. Yes, sir. On the materiality also, there is a threshold limit.
Yes. So this is materiality. So what and you know the definition of materiality is material items or material information are those information whose omission, misstatement, or obscuring can impact the decision making capacity of the user of the financial statement. So 10 rupees is not impacting you, 500 rupees is impacting you. Okay. Yes. So let's move further. So now you guys have understood, and you remember I have shown you ONGC balance sheet. So my advice to all of you, kind of the practical extract from the annual report which I am showing you. Please write down those, name of the annual report, because it's a freely downloadable. You can download it free of cost. Okay. Just refer those disclosure. You will be very happy to see those disclosure, and believe me, when you see this on a practical side, you don't need to learn. It will get printed in your mind, right? ये आपके माइंड में छप जाएगा, आपको लर्न करने की रिक्वायरमेंट नहीं होगी. Okay, just look at that, right? Clear? Yes. Now friends, we are discussing general feature of the financial statement. What is meant by general feature? Means overall consideration of the financial statement. If you are preparing a financial statement, if you are auditing a financial statement, what is the general feature? General feature क्या होगा, क्या करना चाहिए, right? उस financial statement को बनाने के लिए what should be the overall considerations? Okay. So the general feature of the financial statement is the financial statement should present true and fair view. Present true and fair view. Have you seen this concept of true and fair view, this terminology of true and fair view in the auditor's report also? Have you seen
Yes,
that?
sir. In the objectives of the audit, SA 200.
So the auditor says that the financial statements of XYZ Private Limited is reflecting true and fair view as it has complied with all Indian accounting standards, right? So standard says that the financial statements should reflect true and fair view, and it has to be in compliance with all Indian accounting standard, right? It has to be in compliance with all Indian accounting standard. Okay. So presentation of true and fair view and compliance with Ind AS. So true and fair view assumed through application of Ind AS. So how you can say that your financial statements are reflecting true and fair view? Ind AS 1 says that there is a rebuttable presumption. You understood the meaning of rebuttable presumption? What is meant by rebuttable presumption?
Rebuttable, not sure, sir.
Rebuttable presumptions mean general presumptions, general assumption, right? General assumption. It goes without saying. For example, if you will be saying that, sir, we are CA final student. So there is a general assumption that you have already cleared CA inter. हाँ या ना? Yes. CA इंटर क्लियर किया होगा तभी तो CA फाइनल में आए होंगे ना. डायरेक्ट रूट तो है नहीं आने का.
Yes.
Okay. So general assumption is if your financial statement are in compliance with all Indian accounting standard, then it is a rebuttable presumption that your financial statement are reflecting true and fair view. Okay. Second, statement of compliance. This aspect, statement of compliance is also required to be given in the notes to accounts. Friends, in our accounting standard, I'm not talking about Ind AS, in our accounting standard, it is the auditor who was saying that your financial statements are reflecting true and fair view because it is complied with all accounting standard. But now this is a stringent provision. This requirement was not there earlier. This requirement is given under Ind AS. You know what it says? It says that the management has to give explicit and unreserved statement of compliance of all Ind AS in the notes to accounts. The management has to give explicit and unreserved statement of compliance with all Ind AS in the notes to accounts. Explicit and unreserved statement of compliance. Explicit and unreserved statement of compliance. What is meant by explicit and unreserved statement of compliance? What is meant by explicit and unreserved statement of compliance? Explicit. What is meant by explicit? Clear cut. Clear. Okay. Without any qualification. Explicit and unreserved means clear cut without any qualification. For example, if somebody will ask you, have you done your homework? So you have to just say yes or no. You should not say no. So basically, I was traveling yesterday and that is why, I was able to do only 2 pages, not the entire 10 pages. No, nothing. Have you done or have you not done? It's just like a interrogation of a bank manager in England. Yes or no? Just give the objective answer. Explicit means clear, unreserved means without any qualification. So the management has to give explicit and unreserved statement of compliance with all Ind AS in the notes to accounts. With all Ind AS in the notes to accounts. Sir, all Ind AS, what does it mean? For example, Bharti Airtel Limited. Bharti Airtel is a telecom company. Okay. And there is one standard Ind AS 41 on agriculture which talks about biological asset. Okay. Biological asset. Sir, biological asset means living animal or plant. Bharti Airtel does not have any biological asset. How do they comply with Ind AS 41? So whether compliance with Ind AS 41 is required in the balance sheet, in the financial statement of Bharti Airtel Limited? Answer is no, because they don't have that item. If they don't have that item, how come the compliance of Ind AS 41 will be applicable? If a company is a standalone company, individual company, and they don't have any subsidiary, joint venture or associate, so whether they will do the consolidation, करेंगे कैसे? है ही नहीं जब कोई सब्सिडरी जॉइंट वेंचर और एसोसिएट. जब सब्सिडरी जॉइंट वेंचर और एसोसिएट नहीं है, so how do they comply with Ind AS 110, 111, 112, 27, 28? So these standards are for consolidation. बताइए करेंगे नहीं करेंगे?
Yes, sir. Then we need to disclose as this accounting standard is not applicable to this company.
So basically, you're not required to disclose. So basically, the meaning of this line is when it says all Ind AS means all applicable Ind AS to the entity. Okay, all applicable, right? All applicable, right? So वो applicable ही नहीं है तो फिर compliance की बात ही नहीं आती. Okay, you are not required to write anything, but to cut a long story short, okay, you are not required to write that the company has complied with all Ind AS except this. It is understood. If something which is not applicable, compliance is not required, right? Or it is understood that it is already complied with because nothing is there. Okay, clear? So for example, you are a student, right? But you are earning, you have fixed deposit in the bank. So being an adult student means more than 18 years of age, and you are earning also, you are filing your return of income. Are you filing your income tax return? Yes, if you are earning.
Yes.
So
Yes,
you are
sir.
filing your income tax return, but you are a student. You are not required to file your GST until and unless you are into a business. Okay. So आपका कोई business तो है नहीं, तो आप कोई GST रिटर्न फाइल नहीं करते. GST एक्ट के अंदर आपका कोई कंप्लायंस नहीं है. So if I will ask, are you complied with GST laws? So GST laws, yes, answer is yes. Why? Because GST law says that if you have a taxable GST services or you are selling goods or providing services, then you have to take a GST registration and etc. Right? So in a way, you are not doing all those stuff. So in a way, you have not taken any GST registration. So you are complied with GST law. You are not required to take and you have not taken. Are you getting me?
Yes, sir.
So to cut a long story short, what I'm trying to say here, so when it talks about all Ind AS means all applicable Ind AS to that entity, right? So whatever is not applicable to that entity, you're not required to disclose separately. You're not required to disclose because it is understood since that biological asset is not there and hence Ind AS 41 provisions have not been applied. So it means it is in compliance with Ind AS 41. अगर होता biological asset तो Ind AS 41 comply नहीं करते, then it is a non-compliance, right? So friends, the first feature of financial statement is that the financial statement should reflect true and fair view and it has to be in compliance with all applicable Ind AS to the entity. And the statement of compliance has to be given, which has to be explicit and unreserved. The statement of compliance is required to be given. Friends, this section was not required earlier, but now this section is required. If there is a departure from compliance of Ind AS, means, for example, in extremely rare circumstances, extremely rare, if a regulatory framework requires a departure from compliance of Ind AS, for example, related party disclosure. Related party disclosure says that if your KMP is taking a loan in the capacity, if your KMP is taking a loan, then you have to disclose this. And it is a bank, for example. For example, it is a bank or it is a NBFC, not bank, it is a NBFC. NBFC is into the business of lending money. They are providing loan to the customer. One of the director of this NBFC, he was in need of the money and he has taken a loan in the capacity of a customer. When I'm saying in the capacity of a customer means if the other customer would have taken the loan from NBFC, whatever interest NBFC would charge to that customer, he has charged to the director also. Means Director has taken this service or loan in the capacity of a customer, not in the capacity of a director. You understood this thing, right? You are acting into various capacities. So here he has acted in the capacity of a customer and he has taken a loan, but he is director also. He is KMP also. So Ind AS 24 says that it is required to be disclosed. But RBI Act, Banking and Regulation Act, what they says? They says that you can't reveal the identity of the customer, right? You can't. Otherwise, why only that director who is a customer? There are 1 crore customer. Are you getting me? So Banking and Regulation Act prohibits that. You need to, you don't need to disclose the identity of the customer, that what transaction he has done. So the regulatory framework is doing a contradiction with the Ind AS standard. So in this case, the regulatory framework in line with that, this is misleading. So if you are not giving a disclosure relating to the director who is a customer, right? In that case, you just need to disclose that one of the disclosure has not been made where the KMP has taken a loan in line with the regulatory framework. So this just a disclosure is required, right? So the departure from compliance of Ind AS is only applicable when it is conflicting with the regulatory framework. Okay, is that clear? Is that clear?
Yes, sir. Clear, sir.
So let me show you the statement of compliance section. Okay, should I show you in the listed company annual report?
Yes, sir. Please, sir.
This is Adani Enterprises Limited balance sheet. Can you see this statement of compliance? See, basis of preparation statement of compliance. Okay. The financial statement of the company have been prepared in accordance with Indian Accounting Standard notified under Section 133 of the Companies Act 2013, read with Companies Ind AS Rules 2015 as amended from time to time, and other accounting principles generally accepted in India. Have you found any if and but?
No.
No,
No
sir.
if and
It's very clear statement.
It's an explicit and unreserved statement of compliance. It's very explicit and unreserved statement of compliance, right? It's clear cut. It's explicit and unreserved. Right, Neha? Neha, is that clear?
Yes, sir.
Okay. So this is the meaning of explicit and unreserved statement of compliance. This is a new section which is required under Indian accounting standard, which was not there in accounting standard, right? Can we go back to our presentation? So the first aspect, my dear friends, the first aspect we have covered, presentation of true and fair view and compliance with Ind AS. The second aspect is going concern. What is meant by going concern? Can anyone tell me what is meant by going concern?
Business will be ongoing in future also. On that
Go-
basis, financial statement are drafted.
Yes.
Your going concern operation will be on the foreseeable future. That is, say, 12 months at least.
Perfect. Perfect. So business will run in future, but which future? Future is uncertain. Future is infinity. So what kind of future we are talking about? We are talking about foreseeable future. And what is the meaning of foreseeable future? The meaning of foreseeable future is 12 months from the reporting date. So the financial statement which you are preparing a financial statement for 31st March. When you are preparing a financial statement for 31st March, it has to be evaluated whether this company is able to run in the foreseeable future, whether this company is able to run in the next 12 months, whether this company is able to run in the next 12 months from the reporting date, right? So the management and auditor evaluates whether the company has sufficient funds, whether the company has sufficient approved credit lines, so that the company will be able to run their operation in the foreseeable future. Going concern has to be going. Concern means entity, right? So what is the fundamental principle of accounting standard? What is the fundamental principle of financial statement? The fundamental principle which we have read in CA Inter also, the fundamental accounting principle is going concern. that the business will run in the foreseeable future. What happens when this going concern will be impacted, and what happens if the going concern will be impacted? Friends, Ind AS 1 says that when preparing financial statement, management shall make an assessment of entity's ability to continue as a going concern. As I told you, on the reporting date for which the management is preparing the financial statement, the management has to check whether this entity is able to continue as a going concern in the foreseeable future. Okay. And the entity is required to prepare the financial statement on a going concern basis, right? If it is a going concern, there is no need to disclose, yes, it is a going concern. It is a rebuttable presumption. It is a rebuttable presumption. You are not required to call out. आपको call out करने की जरूरत नहीं है. You are not required to call out. If it is preparing on a going concern, fundamental accounting assumption, okay? But the entity is not required to prepare the financial statement on going concern if there is an intention to liquidate or to cease trading There is an intention to liquidate or to cease trading. Friends, the entity itself, in the board meeting, it was approved that the management will liquidate this entity or the management will cease trading. Okay. If there is an intention to liquidate or to cease trading, in that case, the financial statements are not required to be prepared on a going concern basis, or there is no other alternative except to do so. Friends, for example, you heard about BS4, BS6 vehicles, engine, BS4, BS6. Have you heard about that?
Yes, sir. It's a emission.
Yes, it's talking about the emission. Okay. So it's a technology. BS4, BS6. So nowadays BS6 engines are prevailing, right? So there was one entity which was supplying a component to the automobile companies. And this entity, the component which this entity was supplying to the automobile companies for manufacturing the engine, right? That was BS4 engine. Okay. Now government has come up with a notification that BS4 engine will not be allowed anymore. So this entity which is providing its output to such kind of companies which were using BS4, now they are using BS6. So there was no demand. There was no demand about this company. There was no demand of this company. There was no demand for the product which is manufactured by this company. If I talk about this company is very sound, very cash rich company. Okay. Good orders, good product line, right? Everything is great. They don't have any intention to liquidate. They don't have any intention to stop the business, shut the business. But due to this government announcement, they don't have any alternative except to shut down the business, except to stop the business, except to liquidate, because they are into a single product line and they are feeding to BS4 engine, which is not applicable, which is not prevalent anymore. So friends, in this case, this entity does not have any alternative except to shut down the business. So in this situation, the financial statement should not be prepared on a going concern basis. Okay. Right? I believe you guys have understood this concept. Disclosure in case of material uncertainty. Friends, these are real life concept. Okay. So being a chartered accountant, being a CA final student, these are the basic concept which you should be able to know, right? So it most probably, or I would say not necessarily, the question will come on these aspects in the examination, but the examination will test you on these aspects in other question as well, in other questions. Okay. So you don't get the straightforward question in the exam on these aspects, but these aspects are important to solve the questions which are complex questions, which may be complex questions. Okay. So these concepts you must be well aware of. These are the fundamental concept. We are learning Ind AS 1, presentation of financial statement, first standard in the series of 39 Indian accounting standard. Okay. Disclose in case of material uncertainty. Friends, while the company is continuing as a going concern, but there is a material uncertainty. For example, a court case was going on, and the company's fate and the company's future is depending on that outcome of the court case. Okay, outcome of the court case. The company is pleading. So, friends, while it is continuing as a going concern, probably it will take 1 year, 2 year, 5 year for getting the outcome of that court case. But of course, the company is depending on the court case. If the court case becomes unfavorable, the company will bankrupt. The company's business has to stop. So what I'm telling you here, so the thing is, if there is a material uncertainty, while the going concern has not been impacted, but if there is a material uncertainty, it has to be disclosed in the notes to accounts. Okay, like practical real life example is Vodafone Idea Limited. Your homework is download the annual report of financial year 23-24 of Vodafone Idea Limited and read the section of uncertainty relating to the going concern. Read that section. Uncertainty relating to the going concern, right? Read that section. Clear? If financial statements are not prepared on a going concern basis, disclose the fact, basis, and reason for that, right? That the financial statements are not prepared on a going concern basis. If not, then on what basis, and what is the reason why financial statements are not prepared on a going concern basis? Clear? Is that clear? Clear in mind or clear from mind?
Yes, sir. Clear, sir. Clear in
So
mind.
let's discuss this question, this case study. An entity is engaged in a plastic product manufacturing in particular area. The entity is a profitable entity and has huge orders in hand as at 31st March 2020. The government has announced on 31st March 20 to ban trading and manufacturing of plastic after 30th September 2020. This is the only product in which the company is engaged. Advise the company on going concern aspect as per Ind AS 1. Friends, the entity was profitable into plastic manufacturing. Huge orders on 31st March 20. But the government has announced on 31st March 20 on the reporting date to ban trading and manufacturing of plastic after 6 months. This is the only product in which the company was dealing. Advise the company on going concern aspect as per Ind AS 1. Friends, tell me whether this company will continue to prepare the financial statement as per going concern basis, or the company should not prepare the financial statement on a going concern basis. What is your view?
Company should not prepare financial statement based on going concern
Why?
Yes.
because it will run only for 6 months.
Yes, you're right. In this case, although neither the company has ceased trading nor the management wanted to liquidate the entity, but there is no alternative left except to do so due to the government announcement within 12 months from the reporting date. Hence, there is an impact on a going concern. So let me see how many students have replied. Yes, Geet has replied, and Geet has said that not a going concern because there is no alternative but to do so. Yes, Geet, you are absolutely right. Friends, so we discussed this presentation of true and fair view, going concern. Now, accrual basis. Do I need to discuss accrual basis? What is meant by accrual basis? Accrual basis means transaction and events are recognized when they occur and in the period in which they relate. Means, for example, you have made a credit sale. On 31st March, you have made a credit sale of rupees 10 lakh to the customer. And the customer has paid you money in the month of April. So will you record the transaction of sale in March or in April? कब करेंगे?
In March.
In March. Yes. Why? Because you are preparing your accounts on an accrual basis. But if you would have prepared your accounts on a cash basis, then
In April.
in April.
Whenever we receive the money.
So friends, as per Ind AS 1, as per Companies Act, the financial statement of the companies are required to be prepared on an accrual basis, right? So accrual basis means recording the transaction when the transaction are happening, not when the cash is coming. Recording the transaction when the transaction is happening, okay? Consistency. What is meant by consistency? Consistency means the presentation and classification has to be retained unless change in nature of operation necessitates another presentation, or a standard or an interpretation requires a change. So consistency means presentation and classification has to be retained, right? For example, you have a expenses on business promotion. You understood business promotion? You must have seen this line item in many companies' profit and loss. So business promotion means when you are meeting your customer, supplier, right? You are going on lunch with them. So these are the business promotion expenses. So earlier you were clubbing your business promotion expenses in other expenses, but now you have decided to disclose business promotion expenses separately. Okay. So are you getting me? And it is not the mandatory requirement, means it is not a material item, but still you are showing it separately. So it means the presentation which you have done in the last year and the presentation which you're doing and classification which you're doing in this year is different. So standard says that you have to maintain the consistency in presentation and classification so that it has to be well appreciated. Okay, it has to be well appreciated. Okay, is that clear? So Geet has given a very good example of accrual basis. Geet has told, sir, due to accrual basis, the accruals, prepaid expenses, unbilled revenue and deferred revenue is also required to be recognized. Yes, these are the outcome of the accrual concept. Okay, consistency, the presentation and classification has to be retained until and unless this change is required due to a law or due to a standard, or this change is required because the company has changed the business operations. Okay. So we discussed this part also. We discussed the accrual basis and then we discussed the consistency also, the law of consistency. Consistency is the last leg. This is the last item in this slide, but we cover these two parts, accrual basis and consistency. Now coming to aggregation and materiality and offsetting. What is meant by aggregation and materiality and offsetting? Materiality and aggregation, friends, if there is a material item, it has to be presented separately. And friends, what is the definition of materiality as per schedule 3? As per division 2 to schedule 3, for item of income and expense, what is the materiality for presenting it separately?
1% of the revenue or 10 lakhs, whichever is higher.
Whichever is higher. 1% of revenue or 1 million means 10 lakhs, whichever is higher. And believe me, friends, in this batch, right, I am teaching CA final since last 8-9 years in this board of studies classes. Believe me, this is a great batch. Geet, Saminathan, Ankit, Neha, right, Anushi. So you guys are very frequent in responding, right? Very frequent in responding. And I would respect all of you, Chitra also, right? I would request all of you that please respond. Doesn't matter right or wrong, please respond, right? This is how you will interact in class. This is how you will learn more and more. The more you interact, the more you learn, believe me. And this is absolutely great batch, I would say. And I can tell you with guarantee, everyone will score good marks in financial reporting. Whomsoever is attending the batch, I can guarantee you, you will score great marks in accountancy, great marks in financial reporting. Right?
Thank you, sir, with your blessing.
Believe me, I am telling you, mark my word, remember my word, you will tell this when your exam will come out. Believe me, right? You guys have a lot of potential, right? But please try to respond, right? So, okay. While I have not taken everybody's name, I have taken only those names which I can take. I mean to say, which is on the top of my mind, which are looking at the screen, right? But yes, this is a great batch and I'm thoroughly enjoying teaching this batch. Yes. Yeah. And I would request all of you that please also circulate this information in your friend circle also, so that they will get also benefited by these classes. Okay. Yes, materiality and aggregation, friends. Like there is a guidance from Schedule 3 which is applicable on income and expenses. It says that if any income and expense is more than threshold of 1% of revenue or 10 lakh, whichever is higher, it has to be shown separately. Okay. And so like item has to be aggregated and immaterial item has to be aggregated. What is meant by like item and immaterial item?
Like it stationery means when there is a book purchases and the other stationery item printing, all
Yes.
these things we can put together, we can incorporate it.
Yes. So for example, you purchase some pen and paper for your employees, right? And you also get printed the visiting cards for your employees. Okay. You have also got printed the calendars for your employees' desk, right? You have also got the nameplates printed, which has to be put on the workstation of employees. So friends, what happened? All these like items has to be aggregated. It's not like that you have to show printing separately, stationery separately. All the like items needs to be presented as it needs to be aggregated and then presented, right? All the like items has to be presented as a one item. Okay. And all the immaterial item has to be aggregated with other item. For example, the classic example is other income, other expenses, other asset, other liability, other current asset, other non-current asset, other current liability, other non-current liability. What is other expenses? When you run the business, there are a lot of expenses which are happening, right? And those are not frequent. Those are not frequent, miscellaneous in nature. So you are clubbing all these kind of miscellaneous expenses or those expenses which are immaterial, while it is frequent, but it is immaterial. For example, there is a Dashera festival and the company has given a donation of 1 lakh rupee and it is an immaterial item, very small item for that company. So whether the company has to open a separate line item for donation, answer is not required. The company can club this in the other expenses. Okay. So this is the meaning of materiality and aggregation. Offsetting. What is meant by offsetting? Friends, standard says that assets and liabilities, income and expenses shall not be offsetted unless required or permitted by Indian accounting standard. First of all, what is meant by offsetting? Offsetting means setting off of income and expenses or setting off of assets and liabilities. Let's say Sanjay. So I am selling goods to Sanjay. Okay. And I am also getting a services from Sanjay. For the goods which I am selling to Sanjay, Sanjay is my customer. Sanjay is my debtor. For the services which I am receiving from Sanjay, Sanjay is my creditor. So Sanjay is my debtor as well as Sanjay is my creditor. संजय मेरा डेटर भी है और संजय मेरा क्रेडिटर भी है. ओके. संजय इज माय डेटर, संजय इज माय क्रेडिटर. संजय is both. Sanjay is my debtor as well as creditor. And as per the contract, on every reporting date, on a monthly basis, the net amount needs to be checked. For example, I have to pay 100 rupees to Sanjay and I have to receive 120 rupees from Sanjay. So the settlement is always happening in the net. So my question to all of you, in this case, whether you will offset your income and expense, whether you will offset your revenue from sale and your expenses of consultancy, your consultancy expense and sale of goods, whether you will offset this in the P&L. The
No, sir,
item
we
which
should.
you are selling to Sanjay and the service which you are getting from Sanjay, will you offset the item in P&L?
No.
No.
No,
Sale of goods
Sir,
are different.
Yeah, we will not do it.
Yes, it is not offsetted. But in the balance sheet, whether trade receivable and trade payable, debtor and creditor, money received from Sanjay and money payable to Sanjay, whether this has to be offsetted or this has to be shown gross.
In balance sheet, you will offset it.
In balance sheet, it is required to be offsetted. Why? Because balance sheet is reflecting a statement of financial position, right? And what is your financial position on the reporting date? If you have to pay 100 rupees to Sanjay, and if you have to receive 120 from Sanjay, so what is the net position? 20 rupee. You are not required to pay 100 rupees to Sanjay. You are required to receive 20 rupee from Sanjay. Yes or no? Yes or no?
Yes, sir.
So my dear friends, so this balance sheet is reflecting your statement of financial position. This balance sheet is reflecting statement of financial position. This trade receivable and payable is required to be offsetted. Okay. Is that clear? So this is required to be offsetted when it is required by Ind AS. Second, Saminathan has given an example of deferred tax asset and deferred tax liability. Friends, when you are preparing your balance sheet, on few item deferred tax asset is created. On few item deferred tax liability is created. DTA and DTL. Friends, are you presenting DTA and DTL separately? Or you will net off your DTA and DTL? You will set off your DTA and DTL and show it net. Tell me, guys. You have to offset. You have to net. Okay? Because Ind AS 12 says that the deferred tax asset and deferred tax liability has to be set off, has to be offsetted, and whatever is net that is required to be presented. Friends, provision for current tax, provision for income tax, and TDS and advance tax. So there is a provision for tax. It is a liability. Income tax and advance tax means TDS and advance tax. It is an asset. So whether the provision for tax has to be shown as gross and income tax and TDS and advance tax has to be shown as gross, or it has to be netted off.
Sir, we need to show separately because it's a separate requirement.
No, it has to be netted off. Because what you will do, Saminathan, so it is year wise. If in a particular year, there is a provision for tax. What is a provision for tax? The tax which is payable on a current year income, right? For example, the company has earned on 1 lakh rupee. So what is the tax liability? Assuming tax rate of 25%. What is the tax liability?
25,000.
25,000 is the tax liability. Okay? So when the company has sold goods or services, so the TDS was deducted for 15,000 rupees. For this current year, the parties have deducted 15,000 rupees and deposited as a TDS. And the company has to pay 25,000 as a tax liability, the tax for this year. So whether the company has to pay 25,000 or the company has to pay only 10,000. The tax expense is
only 10,000. Yeah.
Only 10,000. So on the asset side, TDS deducted was there. On the liability side, 25,000 liability is there, but it has to be set off. Why? Because on the reporting date, your obligation is to pay only 10,000. 15,000 has already reached to the department. Yes or no?
Yes, sir. Clear, sir.
Yeah. So in the P&L, your provision for current tax is 25,000 rupees. But in the balance sheet, the numbers has to be offsetted. Clear?
Yes, sir. Very much clear.
Second and next example. Ind AS 37. What is the title of Ind AS 37?
Provision and contingent liability.
Provisions, contingent liability, and contingent asset. Right? Provisions, contingent liability, and contingent asset. Right, Monica? So this is the title of Ind AS 37. Provisions, contingent liability, and contingent asset. You know what it says? It says that, for example, you are a dealer of iPhone. Apple. So iPhone is giving a guarantee to the customer for 1 year, let's say. This is an iPhone and the company is giving you a guarantee. And Monica is the dealer of iPhones. So Monica is selling iPhone to the customers, right? And with 1 year warranty, and Monica is getting a warranty from the company. Means whenever there is any loss, the company will make good the loss. And the contract is whenever the customer will be in default, they will come to Monica. In default means whenever the iPhone will have any problem, so they will come to Monica, the store which is run by Monica. So now Monica is creating a provision for warranty expense. Okay, because as per the past trend, she has seen that whatever sale she will make, she will get a warranty repair expense of minimum 5%, right? So what she has done, she has sold mobile phone worth 10 lakh rupee, and 5% of 10 lakh means 50,000 rupees. 50,000 rupees she has to record as an expense. But whenever she has to incur this 50,000 rupees as an expense, she will get it reimbursed by the company. So friends, question number 1, whether this provision for warranty towards customer, which is a liability, and the reimbursement from the company, which is an asset, whether this asset and liability has to be netted off?
No.
Why no?
No.
Why no? Because it is from different parties. Even though if the company will not pay to Monica, Monica has to bear this loss. Monica has to make good the loss which is borne by the customer, right? So Monica को तो उसको favor करना पड़ेगा, otherwise these customers will take Monica into the consumer court, right? So because the money has to be received from other party and it has to be payable to the other party, right? And hence your receivable payable should not be set off. But what about P&L? The warranty expenses and warranty reimbursement. Standard says that in P&L it can be set off because whatever expenses is there, of course, it is required. It is supposed to be reimbursed from the company. So from the expense or P&L, it is just a reimbursement. It is just a pass through. So it can be netted off, right? Ind AS 37 says that. Okay, but in the balance sheet, it will not. Why? Because the liability, the obligation is towards other parties, and the asset is from the other party. Okay. So friend, this is the meaning of offsetting. I have taken so many examples. So measuring asset net of valuation allowances, for example, debtors minus provision for doubtful debt. It is not a offsetting. It is measuring the asset net of allowances. Inventory obsolescence, provision for depreciation. When you are showing your PP on net block of the PP, it is again kind of a measuring the asset net of valuation allowances. This is not a offsetting. Okay. Is that clear?
Yes, sir. Clear, sir. Thank you.
Comparative
Sir, I have one quick question. So, in terms of offsetting, so when we do sales and whoever the trading partner is, it's like we would be considering them as our trade receivables, and when we do the purchases, might be with the same person, we should be considering them as trade payables. So when it comes to balance sheet, the portion, the transaction what we had for sales, it would be under assets as a trade receivable, and again when we make the purchases, it would be coming as liability under trade payable. So it's like when it comes to offsetting, it's like how do we actually do that? And similar is the case for tax payables as well. It's like whatever the tax portion we have on sales, it would be under liabilities as tax payable to government. And opposite case is like when we pay any GST on purchases, it would be considered as tax credits under our assets. So it's like again, it's like how do we actually offset those asset balances and liability balances?
Okay. So I have already covered these two aspects. Geet, would you like to answer this question? Geet, can you please unmute and answer this question?
Hello. Yes, sir. So we would just reverse the balance. If the asset is there, we will credit the asset and debit the liability so that it gets set off. And the balance will be, if the assets are higher, we will show it as income tax assets or debtors. And if the liability are higher, we can show it as tax payable or the creditors.
Very good. Yes. So basically what happened, in this transaction, I have already covered this part, but let me clarify also. So yes, the sale and purchases has to be shown separately, okay, in the P&L, because these are two different items. But this receivable and payable is towards one party, right? And if it is settled in net, so of course the offsetting has to be done, and net, if it is net receivable, net payable, so that net number has to be shown in the balance sheet. Likewise, for provision for income tax and TDS and advance tax, year wise it has to be shown net in the balance sheet. Likewise, for GST payable and GST input, right? This has to be presented net, means after offsetting in the balance sheet. Okay, this is how it has to be shown. Friends, so we have covered, what we have covered. We have covered the general feature, which is presentation of true and fair view and compliance with Ind AS, going concern, accrual basis, aggregation and materiality, offsetting, right? Then consistency of presentation, talking about frequency of reporting. So the frequency of reporting has to be consistent, and the minimum frequency should be at least once in a year, which is your financial year. Comparative information has to be given at least for 1 year, right? At least for 1 year. Okay, is that clear? The
Yes, sir,
third
clear,
comparison, the third comparison in balance sheet is required when? The third balance sheet is required when?
When they say a change in accounting policies which record the retrospective changes, and also error which is materiality, and classification changes. There are three parts.
Yes. Okay. So friends, these were the features of the financial statement. These were the general features of the financial statement. Now we are moving towards structure and content, right? So now we are moving towards structure and content. Friends, have you seen any annual report? Any annual report have you seen? If not, then please go. Go means please download any annual report and please look at the annual report. The annual report is like 500 pages, 600 pages, 400 pages, big annual reports. And whether that annual report only contains financial statement?
No, sir, it will contain other information.
It contains a lot of information. It contains your board of directors report. It contains corporate governance report. It contains BRSR report. It contains management discussion and analysis report. Okay. It contains financial statement also. It contains a lot of stuff. Right? Lot of stuff. So, Ind AS 1, and let me tell you, because you all are either completed your articleship or pursuing your articleship, right? So when you, as an aspiring CA, working in real life, working in real world, or after becoming a CA, when you will be working as a professional, you will not find only companies on which Ind AS is applicable. You will find companies where accounting standards are also applicable. Yes or no? आप प्रैक्टिस करोगे तो क्या, आप जब प्रैक्टिस करोगे, मान लो फ्यूचर में आपको अपना ऑफिस खोलना है, तो आपको सारे क्लाइंट क्या लिस्टेड कंपनी मिलेंगे या बड़ी कंपनी मिलेंगे, प्राइवेट लिमिटेड? आंसर इज नो. छोटे क्लाइंट भी होंगे, विल हैव स्मॉलर क्लाइंट आल्सो व्हिच इज अ नॉन कॉर्पोरेट एंटिटी as well, which is a small private limited companies as well. So friends, if I compare my Ind AS with accounting standard, these Ind AS are very meticulous standard. Meticulous means very specific, very clear, very detailed, right? And Ind AS 1 says that in a publication, or I would say in a series of document, your financial statement should be clearly identified and clearly distinguished from other information, right? It says that, like in an annual report, where there are a lot of guidance, where there are a lot of, reports are there, lot of sections are there, your financial statement section has to be clearly called out. हालांकि ये बोलने वाली बात नहीं थी, फिर भी ये Ind AS में लिखा हुआ है, right? Ind AS 1 में. It also says that from the structure and content perspective, it also says that the reporting period has to be at least annually. It can be longer, it can be shorter. It can be longer, it can be shorter also. It can be longer than 1 year, it can be shorter than 1 year. It can be longer than 1 year, it can be shorter than 1 year. Okay. So when it can be longer or shorter than 1 year? For example, it is a newly incorporated company and the company was incorporated in the month of October. Then 6-month financial statement will be the first financial statement. For example, the company goes into liquidation and the company ends on 31st of December. Okay. The company ends on 31st of December. So in that case, what happens in that case? In that case, 9 months financial statement has to be prepared. So the point is, the reporting period has to be at least annually, but if it is longer or shorter, it has to be explained that why it is longer, why it is shorter. Or at times, how come it become longer? For example, the incorporation date is in the month of January. So the company is allowed to prepare the first financial statement for 15 months. Okay. The company can prepare first financial statement as a 15-month financial statement. Okay. So the period is longer. It has to be disclosed. Information required. Name of the company is required to be given. If there is any change in the name, it is also required to be given. The Companies Act allows you to also publish the old name and the new name both for at least 2 years from the date of change. Whether it is a standalone financial statement or consolidated financial statement, it is also required to be disclosed, right? You are absolutely right, Geet. Formerly known as, erstwhile or formerly known as has to be given. Period covered, like balance sheet as at 31st March 2025. Profit and loss for the year ended financial year 24-25. Currency. The currency has to be like in rupee, in US dollar, right? Level of rounding in million, in crores, okay, in thousands. So this is required to be, the level of rounding is required to be disclosed on the financial statement. Have you seen this? Amount in rupees, millions, amount in rupees, crores. Yes.
Yes, sir. Yes, sir.
So see,
If the revenue is less than 100 crore, then 100, 1,000, lakh, million, crore, like that. If more than 100 crores, then it is a lakhs and crores only.
yeah. So the only thing is, if the revenue is up to 100 crores, not revenue, total income is up to 100 crores, then crores is not the unit. So crore will be applicable when it is beyond 100 crores. Okay. Yeah. Yes. So name, standalone consolidated, period covered, currency, level of rounding, right? So this is required to be disclosed. Okay. So see, such a specific standard. You might be thinking, sir, ये तो बहुत ही basic बात है ना? But ये सब भी आपको disclose करना पड़ता है. Yes or no? You are required to disclose this. So let me show you the balance sheet of Adani Enterprises Limited. Big balance sheet. See, Adani Enterprise, name of the company, period, right? Rupees in crores, okay? And when you go to this balance sheet, so they have written standalone balance sheet. Let me show you standalone financial statement. So this section they have called out. What is the name of this section? What is the name of this section? Standalone financial statement. Okay. It is standalone financial statement. Yes. So friends, now in structure and content, let me discuss one by one balance sheet, profit and loss, statement of changes in equity, Okay, and your cash flow and notes to accounts. I'll discuss the components one by one. Okay, is that clear? Yes, friends, talking about this one by one, talking about current and non-current. Current and non-current. Your balance sheet line item has to be divided into current and non-current. And you can see that in this Adani Enterprises balance sheet, you can see that the entire balance sheet is divided into current and non-current. आपको पता है ना, आपने देखा भी होगा बैलेंस शीट्स में.
Yes.
Yes, you can see this asset side. Asset is non-current asset, current asset. The entire asset side is bifurcated into two parts, right, Saminathan? Current and non-current. Right?
Yes, sir.
Your liability, equity is never classified into current and non-current. Equity is equity. Then your
Yes, sir.
liabilities are also classified into non-current and current. So what is the balance sheet structure? The line items of all the balance sheet item has to be divided into current and non-current. Okay, it has to be divided into current and non-current. Sir, what is current and what is non-current? So we'll talk about that. Classify based on liquidity if more relevant. So standard says that instead of current and non-current, you can classify your balance sheet item on the basis of liquidity. On the basis of liquidity. Right? And when it is required to be classified on the this is, current non-current is mandatory as per Companies Act, as per Schedule 3, as per Ind AS. But it allows you on the basis of liquidity if more relevant. When it become relevant? In case of liquidation. In case of a not continue as a going concern. When the company is preparing the financial statement on a realizable basis, then this classification basis on liquidity is relevant. Okay. Obligatory or minimum line item on the face of the balance sheet. This standard, as I told you, that regarding the balance sheet, the format is given under Schedule 3, but the guidance is also given under Ind AS 1. This standard also gives you the minimum line item on the face of the balance sheet. For example, para number 54. Para number 54 talks about the presentation of minimum line item on the face of the balance sheet. Para number 54, it says that, right? What is this para number 54 talks about? The minimum line item on the face of the balance sheet, like property, plant and equipment, investment property, intangible asset, financial asset, trade and other receivables, cash and cash equivalent, biological asset, inventory, non-current asset, trade and other payable, provision, financial liability, deferred tax asset and liability, non-controlling interest, capital, reserves and surplus, other equity. These line items are the minimum line item. Two questions to all of you. Two questions. Question number one. This talks about the minimum line item on the face of the balance sheet. Question number one. Like this biological asset. This is the minimum line item. Many company does not have a biological asset. So whether this line item is required to be presented as a nil.
No, sir, it's not required.
No.
Not required. Not required. So minimum line item means if the numbers are there either in the current year or in the previous year. अगर नंबर है, वो आइटम है, चाहे करंट ईयर में है चाहे प्रीवियस ईयर में है, then you are required to disclose. Otherwise not. Question number 2. Whether while preparing the balance sheet only Schedule 3 format, Division 2 to Schedule 3 format needs to be referred, or this paragraph 54 of Ind AS 1 also required to be referred?
Sir, both to be referred, sir.
Both will be referred. Both is required to be referred. Both is required to be referred, right? And if any line item is missing in Division 2 to Schedule 3, but it is given in para number 54 of Ind AS 1, and the company has that item is required to be disclosed. That item is required to be disclosed. Okay? Clear? That item is required to be disclosed. Is that clear?
Yes, sir.
Yes, clear.
Perfectly clear?
Sir, I have one question. If the non-current assets and liability held for sale, it is separately to be disclosed. But if it is less than 10 lakh or that criteria, whether we need to be put in separate line item for that?
See, non-current, so that 1% of revenue or 10 lakh criteria is only for the P&L item, only for the income and expenditure, right?
Oh,
It is not
okay,
for
okay.
balance sheet. It is not for balance sheet, number one.
Okay.
Number two, why Schedule 3 has given that criteria? Schedule 3 has given that criteria for income and expenditure because the company were clubbing lot of income and expenditure, right? And it is not talking about lower, it is talking about higher. Let's say Reliance. Reliance has a revenue of 10 lakh crore. What is 1% of 10 lakh crore? 1% of 10 lakh crore is 10,000 crore. 10 लाख करोड़ का 10 लाख करोड़ का 10 लाख करोड़ का 1% क्या होगा? 10,000 करोड़ ही होगा, राइट? 10,000, 1 lakh, 10 lakh. So 10,000 crore. So 10,000 crore or 10 lakh, whichever is higher. Which is higher? 10 lakh, 10,000 crore is higher. 10 लाख और 10,000 करोड़ में हायर क्या है? 10,000 करोड़ ही हायर है ना?
Yes, sir. Yes,
So
sir.
it is talking about presenting those income and expenses separately, which is more than 10,000 crore. आई एम टॉकिंग अबाउट रिलायंस बैलेंस शीट. आप सोच रहे होंगे कैसी बड़ी बड़ी बातें कर रहे हैं सर. मैं रिलायंस की बैलेंस शीट की बात कर रहा हूं. ओके, सो वो जो क्राइटेरिया है तभी वो क्राइटेरिया हायर का दिया हुआ है. ओके, नॉट लोअर, हायर. ओके, सो फ्रेंड्स, this is not for balance sheet. Number two, in balance sheet doesn't matter if the number are small, but if it is within the minimum line item under Ind AS 1, okay, or it is shown in Schedule 3, it has to be presented separately on the face of the balance sheet. You are required to refer both the guidance, right? When I took the interview of fresher chartered accountants, and I used to ask, tell me while preparing the balance sheet, what you will refer. You will only refer Schedule 3 or you will refer something else also. You know what they say? They say only Schedule 3. Friends, it is not only Schedule 3. It is Schedule 3 plus Ind AS 1. Ind AS 1 का टाइटल क्या है? What is the title of Ind AS 1?
Presentation of financial statements.
Presentation, you are right. Presentation of financial statement, जो मैं अभी पढ़ा रहा हूं. तो जब नाम ही presentation of financial statement है, then of course you need to refer that standard also for presenting your financial statement, right? But believe me, everybody forget that. And out of, I would say, 100 candidate, 90 candidate only talks about Schedule 3. They never told me that, sir, we need to refer, this Ind AS 1 also. They never tell me. Okay. So friends,
Sir,
Schedule 3.
one question is leaked out now.
So friends, Schedule 3 gives you the format and Ind AS 1 gives you the guidance. And Schedule 3 itself says that if there is over and above requirement from Schedule 3, if Ind AS requires something more, you have to give something more. You remember I have taken an example of revaluation surplus in my class. That Schedule 3 only talks about disclosure of revaluation surplus if it is beyond 10%. But Ind AS 16 requires only revaluation surplus disclosure. So even though if the revaluation surplus is 2%, still it is required to be disclosed in the notes to accounts. Why? Because Schedule 3 says that my requirement is not maximum requirement. My requirement is minimum requirement. Okay. And if Ind AS has more requirement, you need to refer, you need to follow those requirement as well. Right. Friends, as per Ind AS 1, which one of the following item is not required to be shown on the face of the balance sheet? Tell me. Biological, PP, investment property, contingent liability, intangible asset.
Sorry, contingent liability.
मिले सुर मेरा तुम्हारा तो सुर बने हमारा. Everyone is right. Contingent liability, it's a off balance sheet item. Friends, then we'll discuss current asset and current liability, non-current asset, non-current liability. So let's have a 10 minutes break and then we will discuss this concept of current asset and current liability, right? Let's have a 10 minutes break. It's 8:20 now. We'll meet at 8:30. Okay?
Okay, sir.
all the balance sheet line item has to be bifurcated between current and non-current, right? So current asset and current liability, current asset and non-current asset, current liability and non-current liability. Now, what is a non-current asset? What is a non-current asset? Any asset which is not current is non-current. Any asset which is not current is non-current. Very simple. But what is current asset? That we need to learn. So current asset are those assets which are expected to realize, right? When the company expects to realize the asset or intends to sell or consume it in the normal operating cycle. If the entity expects to realize debtors within 1 year or within operating cycle, it is known as a current asset. What is meant by operating cycle? Operating cycle means when a cash has to be converted into a cash. When a cash has to be converted into a cash. इसका क्या मतलब होता है? For example, the company has spent money in procuring the raw material, right? And it will take 3 months. It will take 3 months for procurement of raw material. The company pay cash and the raw material come to the company in 3 months. Then company process that raw material for converting into finished goods. It will take around 8 months in processing that raw material to make it a finished goods. So once finished goods made, it will take around 3 months to sell that finished goods. Once finished goods got sold, it will take around 4 months to get the money from the customers. So friends, the money which was spent on the raw material, right? So what is the total period in which this money is getting received, in which this money is getting collected? 3 months procurement of raw material plus 8 months processing of raw material to convert into finished goods plus 3 months in selling those goods plus 4 months in recovering the money from the debtors. What is the total period?
Total 18 months.
Total period is 3 plus 8, 11, 11 plus 3, 14, 14 plus 4, 18. 18 months means 1.5 years. So this cash is converting into a cash within a period of 18 months. I'm talking about average period, right? So what this 18 month is called about? What is the name of this 18 months?
Operating cycle period.
This is known as an operating cycle. Okay. So operating cycle is a cycle in which the money converted into money, in which the cash revolves into a cash. So any asset which is expected to be realized within 12 months or within operating cycle, within 12 months or within operating cycle, it has to be classified as a current asset. It holds the purpose primarily, it holds the asset primarily for the purpose of trading. Example, inventory. Example is inventory. For example, DLF. Have you heard about DLF Limited? DLF? Have you heard about? It's a big company, listed company, real estate company. So DLF is into the business of selling buildings and land and building, plots. Okay. So DLF is selling building. And this building is not necessarily building will be sold within 1 year or within operating cycle, right? Few buildings are just lying with DLF and they took 4 to 5 years in getting sold out. Whether this has to be shown as a non-current asset or current asset. All these buildings are inventory for DLF. Not necessarily. आपने क्या दुकान पे देखा है क्या? दुकान में हर चीज 1 साल में खाली हो जाती है. दुकान में बहुत सारे प्रोडक्ट होते हैं ना जो 1-1 साल पुराने भी रखे होते हैं. Yes or no?
Yes.
Yeah?
Yes, sir.
You must have seen on the shops and showrooms, right? So inventory, the purpose of inventory is to held for trading. The purpose of the inventory is to sell. Doesn't matter whether it is actually getting sold out or not. Are you getting me? Yeah? So friends, if an asset is held for the purpose of trading, it will also be nomenclated as a current asset. Or the asset is a cash or cash equivalent. What is a cash or cash equivalent? It is defined in Ind AS 7. It says that cash and cash equivalent are those assets which can be readily converted into a cash. Cash or cash equivalent are those assets which can be readily converted into a cash, within a small amount of time, means within 3 months. Cash and cash equivalent are those assets which can be readily converted into a cash within 3 months, and that has to be a known amount of cash. Cash and cash equivalent are those assets which can be convertible into a non means KNOWN, in a non amount of cash, in a determined amount of cash, and does not have a significant risk of change in value. What does it mean? Cash और cash equivalent का मतलब क्या होता है?
Cash and cash equivalent.
What does it mean? Let's say a company has invested in the shares of a listed company. Investment. And this is a listed company investment. I mean to say the company has invested into the shares, and the company is able to sell these shares. Whenever market will open, the company will be able to sell the shares. Right? It can be converted into cash within 3 days, within 2 days. My question to all of you, is it a cash and cash equivalent?
No, sir.
No.
Because no definite amount is there that it will get back on
Yes.
selling the shares.
You're absolutely right. Because no definite amount is known as of today. Tomorrow, if the market will crash, probably the money, the cash and cash, the investment which is having a value of rupees 10,000, probably you will be able to fetch only 1,000 or 2,000, or probably if there is a lower circuit every day, you will not be able to sell your share. Okay. So, or it could be vice versa also. 10,000 become 1 lakh rupee also, right? There is no determined amount of money. There is no determined amount of cash. You are not able to know that what money I will be able to receive after within 3 months. Second example, the company has deposited into fixed deposit with the State Bank of India for 3 months. Okay. The original maturity is 3 months. And this fixed deposit is at the rate of 10% per annum. Is it a cash or cash equivalent?
Yes.
Yes, sir. Yeah, it is within 3 months.
Yes, it is within 3 months, and the cash amount is determined. Means there is a maturity amount written on the fixed deposit receipt, or even you can calculate also. 1 lakh rupee deposit, 10% per annum rate of interest. So 1 lakh multiply by 10%, multiply by 3, divide by 12. This is the interest amount. Yes or no? Yeah.
Yes,
so
sir.
This asset can be converted within 3 months in a known amount of cash, and there is no significant risk of change in value. So this is the meaning of current asset, and any asset which is not a current asset is known as a non-current asset. Friends, let's do some question from ICAI study material on current asset and non-current asset. करें कुछ question?
Yes, sir. Please, sir.
Okay, just allow me a minute. I am opening the Board of Studies material. Yes. I hope it is visible to everyone.
Yes, sir.
This example is on operating cycle. An entity produces whiskey from barley, water, and yeast in 24-month distillation process. So this entity, this company is into the manufacturing of whiskey, right? At the end of the reporting period, the entity has 1 month supplier. So 24 months, they are taking 2 years on the distillation process, right? So they are using this they are using grapes, water, yeast, barley, and it took 24 months to manufacture whiskey. At the end of the reporting period, the entity has 1 month supply of barley and yeast raw materials, 800 barrels of partly distilled whiskey, and 200 barrels of distilled whiskey. So at the end of the reporting period, the entity has 1 month's supply of barley and yeast raw materials. 1 month की सप्लाई के इक्विवेलेंट बार्ली और yeast raw material बचा है. 800 barrels of partly distilled whiskey and 200 barrels of distilled whiskey बची हुई है. Means raw material बचा है barley and yeast, work in progress है partly distilled whiskey and finished goods. ये तीनों क्या हैं? Raw material, this barley and yeast raw material, 800 barrel of partly distilled whiskey, this is work in progress, and 200 barrel of distilled whiskey, this is finished goods. So what is all three? All three are inventory. All three are inventory. Raw material, finished goods, all three are inventory. Okay. The raw material are expected to be realized, that is turned into cash after being processed into whiskey. Okay. Fair? In the entity's normal operating cycle. Therefore, even though the realization is expected to take place more than 12 months after the end of the reporting period, the raw material, work in progress, and finished goods are current assets. Why they are current assets?
Yeah, because it is within the operating
Because
cycle, that is
within the
24 months.
Because it is within the operating cycle. Within the operating cycle, right? So this inventory, which is finished goods, okay, again, finished goods is held for trading, but raw material and work in progress, of course, they are within the operating cycle. They will take 24 months. So even though it is expected that it will take more than 12 months for getting ready for sale, still it is considered as a current asset. Okay. Yes. Now let's go to the next example. This illustration number 5 we have covered. So illustration number 5 is on, operating cycle. I have taken an example, raw material 3 months, 8 months, 4 months, 3 months. This is that example. Illustration number 5. Inventory or trade receivable of X Limited are normally realized in 15 months. How should X Limited classify such inventory or trade receivable, current or non-current, if these are expected to be realized within 15 months? It has to be current. It has to be current. Yes. This is again the same example, right? So one of the example I wanted to cover. Yes. On 1st April 2002, XYZ Limited invested 15 lakh surplus funds in a corporate bonds that bear interest at 8% per annum. Interest is payable on the corporate bonds on the 1st April of each year. The principal is repayable in 3 annual installments of rupees 5 lakh starting from 1st April 2003. Friends, the company has invested 15 lakh rupee in the corporate bond. This is an investment. 8% is the rate of interest. Interest is payable, right? So the company has invested. So interest this company will receive on the corporate bonds on the 1st April of every year, right? And the principal is repayable. And the principal is repayable in 3 annual installments of rupees 5 lakh starting from 1st April 2003. So friends, this company has to pay. And this is on an asset side. The company has to pay means the company has to invest. The company has to invest 5 lakh rupee every year. So there is a technical problem in this, in the language of this question, right? Do you also agree with this? Do you also agree with this?
Yes, sir. It can be 2002 or 2022.
So let's leave this question because there is some I'm finding the technical problem in this question. Let's leave this question. Yes. Let's do question number 12. I'll get this corrected because you will get confused because this question has a color of loan, but we are talking about the current asset. On 31st December 2002, an entity replaced a machine in its production line. The replaced machine was sold to competitor for rupees 3 lakh. payment is due 15 months after the end of the reporting period. On 31st December 2002, an entity replaced a machine in its production line. Okay. The replaced machine, जो machine replace की थी, it was sold to a competitor for rupees 3 lakh. Competitor को 3 लाख रुपए में बेच दिया. And the payment is due 15 months after the end of the reporting period. और ये payment इसका cycle क्या है? What is the credit cycle? So the payment is due 15 months after the end of the reporting period. So whether it is current or non-current. This receivable is non-current. Why?
Non-current.
Because it is not a cash or cash equivalent. It is expected to be realized after 12 months or after reporting or after operating cycle, and it is not held for the purpose of trading, and hence it will be considered as non-current asset. Okay. Now let's move to the concept of non-current liability, and there will do a lot of good questions, I would say. What is a non-current liability? Tell me what is a non-current liability. Any liability which is not current is known as a non-current. Very simple. जो liability आपकी current नहीं है वही तो non-current है. And कौन सी liability आपकी current है? Which is settled in the normal course of operating cycle, which is settled in the operating cycle or within 12 months from the reporting date, from the balance sheet date. The liability which is settled within 12 months of the reporting date or within operating cycle. Number 2, the liability which is held primarily for the purpose of trading. What kind of liability? Derivative liability. For example, the company has a derivative liability and the company is trading on those derivative liability. It is also considered as current liability. The third item is very important, and the question comes around third item normally. There is no unconditional right to defer settlement for at least 12 months. No unconditional right to defer settlement for at least 12 months. For example, the company has entered into a contract with a vendor. The company has purchased goods and services from the vendor on a credit basis. The contract says that the money has to be payable within 1 month from the date of purchase. Right? So this entity don't want to pay even within next 2 years. This entity is just passing the time. Whenever the vendor approaches for the payment, the company says that I'm not feeling well as of now, means my position is not great. So allow me 2 months, 3 months, allow me 1 month. This is how the intent of the company that I will not pay in the next 18 to 24 months. And this is the intent of the company, and the company just taking a time from the vendor. My question is whether this trade payable has to be a current liability or a non-current liability.
It will be non-current liability.
Why?
Because it is not settled within operating cycle.
Friends, this is an intent, right? When we talk about asset, whether it is expects to realized, the word is expects to realize. But when we talk about liability, the word is not expect to settle. Miruna, you are right, it's a current liability, right? Why? In liability, it does not talks about expects to settle. It does not talks about expects to settle. It talks about settled, and it also talks about, do you have any unconditional right to defer the settlement? While this is your intent, you are not paying. But going by the contractual terms, do you have any legal right to defer the settlement beyond 12 months? Answer is no. You have the right to defer the settlement only after 1 month from the date of purchase, right? So in this case, since the company does not have an unconditional right to defer the settlement for more than 1 year from the reporting date, beyond 1 year, and hence it is not considered as a non-current liability, it will be considered as a current liability, right? So the expectation, you will say, my expectation is not to pay. It is not depending on the expectation, right? It is not depending on the expectation. Is that clear? So let's do some good questions from ICAI study material. There are
Sir,
some
I have one question. Say unconditional means there is no conditional. What is meant by no unconditional, right?
no unconditional right. No unconditional. So basically, no unconditional right to defer the settlement. For example, if in the contract it says that the goods and services which I have procured from the vendor, I have to pay. There is a credit of, let's say, 15 months. There is a credit of 15 months. I have to pay after 15 months. Okay. So when the vendor will come to me for the payment, for example, he approaches me after 2 months for the payment from the date of purchase. I will say that, listen, this contract says that in this contract there is a condition. What is the condition? The condition is I have to pay you after 15 months, right? So whether you have any unconditional rights to defer the settlement, it says that you don't have any unconditional right to defer the settlement, then it is a current liability. But if you have an unconditional right to defer the settlement, unconditional rights to defer the settlement ka matlab, the vendor cannot impose you any condition for that. You have unconditional right. Right? Unconditional right means it is guided by the contract that you can defer this obligation after 12 months. In that case, it will become a non-current liability. But if you don't have any unconditional right to defer the settlement, in that case, it will be considered as a current liability.
Okay, sir. Thank you. Got it.
Is that clear? Yeah? होता है ना?
Yes, sir.
मतलब
Yes, sir. Clear,
आपका
sir.
लाइबिलिटी के केस में कॉन्ट्रैक्चुअल होना चाहिए. आप सिंपल इसको ऐसे पढ़ो, if you don't have any contractual right to defer the settlement, then it is a current liability. But if you have a contractual right to defer the settlement after 12 months, then it will become your non-current liability. Contractual समझ में आएगा? Yeah?
Yes, sir. Now clear, sir. After giving the example. Thank you.
Okay. Yes. So just a minute. Let's discuss one example on non-current liability. Yes. An entity has placed certain deposits with various parties. How the following deposits should be classified, current or non-current? Okay. Electricity deposit. Electricity deposit.
Current.
It is a non-current deposit, sir.
So this is a deposit. I'm talking about asset. Okay, I'm talking about asset. So this entity has deposited money with the electricity department. Okay. Electricity deposit. So whether this electricity deposit is a current asset or non-current asset?
Non-current asset,
It
sir.
is non-current, sir.
Why it is a non-current asset?
It will be returned only after when
Because
connection is
it's
cancelled.
See,
When the
actually,
connection is cancelled.
sir, actually, the electricity is very much needed. See, and also it will be used for the future, for foreseeable future also. So it is immediately we will not disconnect the connection. Based on that assumption, definitely it will be non-current.
You are absolutely right. And in the asset side, you also see, do you expect to realize? You don't expect to realize. This is a necessity for running your business, right? So if your business going concern is impacted, if no more you will continue, probably if you are surrendering the electricity connection, it means you are no more wanted to continue your business, right? And hence your electricity deposit, you are not expected to realize your electricity deposit within 1 year. Okay. And hence it is a non-current asset. At all point of time, the deposit is recoverable on demand when the connection is not required, right? However, practically, such electric connection is required as long as the entity exists. Hence, from a commercial reality perspective, an entity does not expect to realize the asset within 12 months from the end of the reporting period. Hence, electricity deposit should be classified as non-current asset. Tender deposit or earnest money deposit. आपको पता है ना अर्नेस्ट मनी डिपॉजिट क्या होता है? आप किसी टेंडर को जीतने के लिए, so whenever you are filing a tender, you want to get some government contract, so you are filing a tender and there is a bid money, right? There is a earnest money which you are paying for. You understand this? Yeah. So this tender deposit or earnest money deposit, is it a current asset or a non-current asset?
If the entity wins the contract, then it will be non-current because it won't be refunded. But if it loses the bid, then it will be current.
Yes. So generally tender deposit or EMD deposit, these are for the purpose of participation in various bids. Okay. They normally become recoverable if the entity does not win the bid. है ना? जब entity अगर bid जीत गई तो क्या होगा? Then the money has to be forfeited. Okay. जीतने के बाद वो पैसा वापस नहीं मिलता ना, but let's say if the entity does not win, then the money has to be recovered back from the government. So bid dates are known at the time of tendering the deposit. Let's say today on let's say 1st of March, you are depositing a money. You are depositing a money for the purpose of filing a tender. And the date of filing of a tender is 6 months from the date of deposit. Within 6 months from the date of deposit. So after 6 months, you will be able to know whether you have won or you have lost. If you have won the contract, what happens? This money will be adjusted. If you have lose the contract, lose the bid, lose the tender, then the money will be received back, right? So, but until the date of the actual bid, one is not in the position of knowing whether he has won or he has lost. Accordingly, depending on the terms of the deposit, if entity expects to realize the deposit within a period of 12 months, it should be classified as current, otherwise non-current. So my dear friends, if the outcome of the deposit means outcome of the tender is within 12 months, if the outcome of the tender is within 12 months from the date of the deposit or from the reporting date, then it has to be classified as current asset, otherwise it has to be classified as a non-current asset. आपको ये देखना है कि जब आप पैसे दे रहे हो, so what is the time by which the results will come out, right? If it is within 12 months from the reporting date, it is a current asset. If it is after 12 months from the reporting date, it is a non-current asset. Is that clear? Is that clear?
Yeah. Yes, sir. Clear, sir.
GST deposit paid under dispute, payment under protest. Is it a current asset or non-current asset?
Sir, this is also same as per the tender deposit and EMD. See, if the fact of the case is known to us within the 12 months, then if the money is received from the things, we can put it as a current. Otherwise,
So
we can
again, you are
classify as
right.
non.
So you need to see, do you expect, considering the fact of the case, you have paid something under protest, means you have already protested. Whatever payment you are making under protest. You are not happy with those payments. But why? Because since it is a government and hence you are supposed to pay. Correct? But you are saying, listen, I'm not happy. I don't agree with these payments, but I'm paying you because my outcome of the case is pending. Right? So if the entity expects to realize this money which this entity has deposited, if the entity expects this thing, so in that case, what happened? In that case, it is a current asset, otherwise it is a non-current asset. Again, it depends on the expectation of realizability. Yes. Now, very good question on liability. Very good question. An entity has taken a loan facility from a bank that has to be repaid within a period of 9 months from the end of the reporting period. So entity has taken a loan and which is repayable within 9 months from the reporting period. Is it current or non-current?
Sir, current, sir.
Current. Now, prior to the end of the reporting period, so before expiry of the reporting period, the entity and the bank enter into an arrangement. The entity and the bank enter into an arrangement whereby the existing outstanding loan will unconditionally roll into a new facility which expires after a period of 5 years. So prior to end of the reporting period means before balance sheet date, the management and the bank both agreed. And what they told? They have entered into an agreement where they say that the existing outstanding loan, which is repayable after 9 months, will unconditionally roll into a new facility which expires after a period of 5 years. So before reporting date, they have entered into an agreement and they told nothing doing. There is no need to make a payment after 9 months, right? This will automatically get converted into a new loan, which will be payable after a period of 5 years. How should such loan will be classified in the balance sheet of entity? Please tell me.
Non-current liability.
It's a
Non-current.
non-current liability. Why? Because if bank will come on the reporting date and ask, please give me the money. So please, you need to ensure that you will pay me the money after 9 months. What you will say? You will show that agreement. You will show that agreement and you will say that I have a contractual right to defer your settlement by 5 years. Yes or no?
Yes, sir. In this case, the unconditional right to defer the settlement beyond the 12 months after the reporting date.
Is there, right? So
Yes, sir.
the loan is not due for payment at the end of the reporting period. The entity and the bank has agreed to roll over prior to the end of the reporting period for a period of 5 years. Since the entity has an unconditional right to defer the settlement of the liability for at least 12 months after the reporting period, the loan should be classified as non-current. All agree with this? You understood the concept? Yes. Second example, second question.
Yes, sir.
Will the answer be different if the new facility is agreed upon the end of the reporting period? If this new arrangement, new agreement, this has entered after the reporting period?
Then it will be current liability because as on reporting date, we do not have the right to defer the payment.
What's your name?
Anushi.
Anushri, you are absolutely right. Because when you are looking at current or non-current, you are looking at on the balance sheet date, on the reporting date. On the reporting date, this company does not have a contractual right to defer the settlement. This company does not have an unconditional right to defer the settlement, and hence, it will be classified as a current liability. Whether all of you agree with me or agree with Anushri?
Yes, sir. Agreed, sir.
Yes. Now what ICAI says, yes, the answer will be different if the arrangement for rollover is agreed after the end of the reporting date, since assessment is required to be made based on the terms of the existing loan facility. As at the end of the reporting date, the entity does not have an unconditional right to defer the settlement of the liability at least 12 months after the reporting date. Hence, the loan has to be classified as current. Question number 3. Will the answer to A be different if existing facility is from one bank and the new facility is from another bank? Tell me.
Then it will be a current liability only because there is a contract to repay and we cannot defer the contract. We have to pay within 9 months. And the new facility is a new contract.
And,
Yes.
and also we have to check that the entity, see the loan perspective, each loan will be considered as a separate aspect. We should not club the both because that
absolutely right.
loan provider is different.
You are absolutely right. So while you have entered into an agreement with the another entity that listen, this loan is repayable after 9 months, okay? And the other entity agrees that for repaying this loan, I'll give you the loan which is repayable after 5 years, right? So this is not refinancing. Refinancing means the same bank is not refinancing you, okay? Yes, loan facility arranged with a new bank cannot be treated as a refinancing, as a loan with the earlier bank would have to be settled, which may coincide with the loan facility arranged with a new bank. आपने एक को देना है, दूसरे से लेना है, right? In this case, loan has to be repaid within a period of 9 months from the end of the reporting period. Hence, it will be classified as a current liability. Okay. Question number 4. Will the answer to A be different if the new facility is not yet tied up with the existing bank, but the entity has the potential to refinance the obligation? So the entity has not tied up with the bank. They have not agreed with the bank. They have not discussed with the bank. But entity knows whenever I'll go to the bank will agree. Tell me, in this case, it will be current or non-current? Entity को पता है कि जब भी मैं जाऊंगी बैंक इसको refinance कर देगा existing bank and I'm not required to pay after 9 months. So on the reporting date, is it current or non-current?
It will be current only because
Why?
contract is not yet done.
Contract
For
is not yet
refinancing.
tied up, right? There is no unconditional right. There is no contractual right to defer the settlement on the reporting date. This is only intention of the entity. This is only something which entity is looking at, right? So there is no contractual right to defer the settlement. Perfect. Is that clear? Is that clear or clear? Friends?
Yes, sir. Clear, sir.
Current asset, non-current asset, current liability, non-current liability. Friends, in asset, the word expectation is there, but in the liability, the word intent or expectation is not there. Is that clear? The liability goes by contractual term. You have to be more conservative in terms of asset and you have to be more aggressive in terms of liability. Okay. This is we have discussed. Carve out we have discussed. You remember the carve out? If there was a
Yes, sir.
long-term loan, we discussed this on the first session. There was a long-term loan, okay, on the reporting date, and this loan was repayable after 5 years. Of course, it was a non-current liability. On the reporting date, the company has made some default in the terms and condition of the loan, and due to the default, the loan become repayable on demand. But before the approval of the financial statement, 31st March, the loan was repayable on demand. It becomes a current liability. But before approval of the financial statement, let's say in the month of May, this loan, the company spoke to the bank and bank agreed, okay, I'll not demand payment. I'll go by the old terms. So in IFRS, this event is treated as a non-adjusting event. In Ind AS, we said that we will treat this event as an adjusting event because the actual nature of the loan was non-current liability. It became current liability because of the default, but now default has made good. Before the numbers become public, before the approval of the financial statement, and hence it will be considered as a non-current liability. We will treat this event as a adjusting event. So this is a carve out which we have taken from IFRS into Ind AS 1. Carve out means in IFRS there is a separate treatment, there is a different treatment. In Ind AS there is a different treatment. So our treatment in Ind AS is different. Okay. You can refer day 1 lecture, the introduction to Ind AS lecture. I have covered this in detail. Friends,
Yes, sir.
now coming to
Yes,
the
sir.
profit and loss. Ankit is saying, sir, if a tender deposit is made and result will come within 6 months, in this case, whether lose or win, in both cases it will be current asset only. Of course, yes, Ankit. Of course, yes. Right? Because even if you will lose, the money you will get back within 6 months. For example, again, you have to see the term and condition, right? So the term and condition says that the outcome will come after 6 months and the money will be, whatever is the case, either the money will be adjusted or money will be received. That is within 45 days from the opening of the tender. Okay. So it is within 12 months, it has to be classified as current. Okay. But if the outcome of the tender will come after 18 months, for example, in that case, it will become non-current. Otherwise, in this case, it will become current. Right, Ankit?
Yes, sir. Thank you. Got it.
Friends, profit and loss. Now let me discuss profit and loss with the help of an Excel file. And please confirm if the Excel file is visible. Whether my Excel file is visible? Is it visible?
Yes, sir. Yes, sir.
Yes, sir. Visible.
Have you guys ever drafted a statement of profit and loss?
Yes, sir.
Anyone who has not, have you guys seen the profit and loss?
Yes, sir. Seen and prepared.
Seen and prepared. Have you guys audited any statement of profit and loss?
Yes, sir.
Yes, sir.
Yes, sir.
Yes. So you understand profit and loss. You understand there is a revenue, there is a expenses, income, expenses, and the result is profit or loss, right? This is what it is. So friends, to make profit and loss under Ind AS simple, I will take you through the journey of profit and loss, and with that, I will explain you the statement of profit and loss. And for the purpose of simplicity, I have bifurcated this profit and loss into two parts, part 1 and part 2. What is part 1? In the part 1, there is a revenue from operation, other income, it is a total income, right? Then there are some expenses, employee benefit expense, other expense, impairment, depreciation, finance cost, then there is a total expense, then there is a profit before tax and other item, then there is an extraordinary item, exceptional item, prior period item, then there is a profit before tax, then current tax and deferred tax, then there is a profit after tax, and this profit after tax goes to retained earnings. I believe each and every one of you must have seen this profit and loss, or must be aware about this profit and loss. Yes or no?
Yes, sir.
Yes, sir.
Yes, sir.
Everyone, I need confirmation even over the chat box from everyone. Miruna, Priya, Udandam. What about you guys? Okay. Everyone is saying yes. Great. Everyone is saying yes. Very good. Geet is saying he has also seen OCI. Yes, friends. Now, let me tell you the Ind AS and IFRS stuff. Friends, this is total income, this is total expense. You remember we also spoke about the classification of expense on the basis of nature. In accounting standard and Ind AS, in IGAP and Ind AS, the nature-based classification of expenses is required. In IFRS, nature and function both are there, but in Ind AS, the nature-based classification of expenses is required. And friends, Ind AS 1 also provided the minimum line item on the face of profit and loss. Like balance sheet, Ind AS 1 also provides the minimum line item on the face of profit and loss. And what are those minimum line item on the face of profit and loss? What are those minimum line item? These are revenue, employee benefit expenses, impairment, depreciation, finance cost, taxes. These are the minimum line item. Okay. So there is an income, there is an expense, then there is a profit before tax and other item. There is a profit before tax and other items. Okay. Now there are few items. Extraordinary item, exceptional item, and prior period item. There are three kind of item. Extraordinary, exceptional, and prior period. Friends, what is extraordinary item? Tell me. Anyone who can tell me extraordinary item? You guys have already seen this extraordinary item in IGAP in division 1 of schedule 3 in accounting standard. What is meant by extraordinary item?
It is something which is not recurring, means it happens sometimes only.
Extraordinary item are those items which does not arise within the ordinary activity, which is not related to the ordinary activity. Extraordinary item are those items which is not related to the ordinary activity of the entity. Extraordinary item are those items which are not in the ordinary activity of the entity. For example, loss of inventory due to fire, robbery of cash, embezzlement of cash, loss due to earthquake. ये सब क्या ऑर्डिनरी एक्टिविटी है ऑर्गेनाइजेशन की?
It is not an ordinary activity.
Can I say that my ordinary activity is to have a loss of inventory of fire on a regular basis? Am I say the
No way.
loss due to earthquake is my ordinary activity? So friends, the concept of extraordinary item was there in IGAP, in the accounting standard, right? And what is that? That is those items which are not related to the ordinary activity of the entity. Those items which are not in the ordinary activity of the entity, right? So friends, extraordinary items are not allowed to be presented in the Ind AS and IFRS P&L. This was the mandatory item in IGAP, but this item is not allowed in what? In IFRS or Ind AS. Why? Because IFRS says that, and our Ind AS are the converged version of IFRS. Our Ind AS says that it is a converged version of IFRS. Okay, it says that IFRS says that, and IFRS is a global concept. IFRS says that when you are running a business, then nothing can't be extraordinary, right? Even the abnormal losses can happen when you run the business. You know, in Japan, earthquake is ordinary or extraordinary?
Japan ordinary, sir.
It's a ordinary, right? It's a global concept. When you run the business, when you appear in exam, either you will pass or you will fail. बट आप एग्जाम में अपियर ही नहीं करोगे तो पास फेल होगा क्या? नहीं होगा ना. आउटकम तो दो ही होते हैं ना. इट इज पार्ट एंड पार्शियल ऑफ लाइफ. इवन having a failure is a part and parcel of life, right? I will not say that we will fail. I was preparing for IAS, but due to some condition, I was not able to appear in my IAS exam. So whether my life has ended?
No,
I'm
sir.
talking about 2004. I'm talking about 2004. My life has not ended. I become a chartered accountant. And in 2007, I have cleared my CA final. And when I cleared my CA final, believe me, so I shifted to CA. Why? Because I was in urgent need of money. And my friends told me that you will get a good stipend in articleship. And when you will file the return of income of your friends and the well-wishers, you get the money also. So I then joined ICAI in my college days. And believe me, I don't have money and I have not taken the classes because at that point of time, these kind of classes were not there. Only physical classes was there. You have to go, you have to pay 6,000-7,000 rupees for the financial reporting, right? So I don't have the money that time. So what I did the self-study. And believe me, I cleared my CA inter and CA final in first attempt. And I was just 5 marks behind the All India rank. 5 marks behind. Okay. So the point is, my life has not ended. I haven't become IAS. So I chose this field. I chose this path. I cleared my CA. I cleared my company secretary also. I told that, let me challenge my life. Right. So then I completed my doctorate also, PhD also. So the point is, to cut a long story short, so the point is nothing is extraordinary, right? So when you run the business, these kind of losses, these kind of, natural calamities, these kind of things will come. And that is why IFRS says that nothing is extraordinary. At the max, it could be exceptional. Okay. So friends, the concept of extraordinary is not there in IFRS and hence it is not there in Ind AS also, right? But the concept of extraordinary was there. The concept of extraordinary was there in accounting standard. It is not there in Ind AS. It is not there in Ind AS. Okay. So extraordinary item is prohibited in Ind AS or IFRS. What is meant by exceptional item? Exceptional item are those items which are in the ordinary activity of the entity. I'm just giving you AS definition. These are not Ind AS definition. I'm giving you AS definition. Exceptional item are those items which are in the nature of ordinary activity of the entity, but require separate disclosure as an exceptional item due to the size and nature of the incidents. For example, if a company is in the business of selling goods on a credit basis, then provision for doubtful debt is a normal or extraordinary? It's a normal thing. When you are selling goods on credit, of course, you have to create a provision on doubtful debt also, na? So creating a provision for doubtful debt is a normal item in the ordinary course of the business. But a huge loss on account of insolvency of one of the largest customer of the company requires separate disclosure as an exceptional item, right? So my dear friends, the concept of extraordinary item is not there in IFRS or Ind AS, but the concept of exceptional item is there. And why it is important? It is important so that the user of the financial statement will be able to know, okay, this time the losses are there, or this time there is a huge dip in profit. Why? Because of the exceptional item. Or there is a huge increase in the profit because of the exceptional item. For example, the company has done the disinvestment or sold stake in subsidiary, and due to the stake sale, the company was able to generate a capital gain of 5,000 crores. But whether the company's business is to sell subsidiary? No, the company's business is not to sell subsidiary. But this year, the company has sold stake in subsidiary and the company was able to earn 5,000 rupees. So whether this 5,000 rupees is part of your normal income or expense, or it has to be shown as an exceptional item. While you have sold this investment in the ordinary course of business, and there is nothing called as ordinary or extraordinary in IFRS or Ind AS, but this amount is huge. The nature of incidence is not frequent. Every year you are not selling subsidiaries, so that the user will be able to know that the amount is huge, the amount is material, and this material amount is one time, it's not regular. So, and hence it is required to be shown as an exceptional item. Huge losses due to COVID. Where you will show those impairment and losses due to COVID?
Exceptional item.
Exceptional item, right? So the question will be, student used to ask me, sir, ab extraordinary item chala gaya. There is no extraordinary item. So where we will show our loss due to earthquake? So the answer is, if it is material, then you have to show it as an exceptional item. If it is not material, just club it with other expenses. Okay? Is that clear? Is that clear or clear?
Yes,
Clear,
sir.
sir.
Clear.
सबको समझ आया? नेहा, प्रिया, very good. Monica, Jyoti, Anushi, Leela, Chitra, everyone is clear? Great. Miruna, okay, great. Saminathan, yes, great. So friends, we discussed extraordinary item, we discussed exceptional item. There is no concept of extraordinary item in Ind AS, right? The exceptional item, yes, the concept is there, okay. Prior period item in your ICAI, in your accounting standard, division 1 of schedule 3, it tells you to present prior period items separately on the face of the P&L. But whether this prior period item is required, in Ind AS,
Sorry,
how will you
it is
correct your prior period error?
Yeah, it is record. We need to incorporate it into the comparative beginning period, third balance sheet.
No. So
The prior period item, if it is immaterial.
My question is different. My question is, in your accounting standard P&L, this prior period line item was a separate line item on the face of the P&L. So whether this line item is required in Ind AS and IFRS also?
No, sir, it's not required.
It is not required. In accounting standard, what was the treatment? If you found that error has happened 5 years back, you compute the total impact of the error in the current year. So that what is the total impact of the error from the date of the error till date? And whatever is the impact of the error, what you will do? You will show that item in the current year P&L as a prior period item. So there was a retrospective calculation, but prospective application. But in Ind AS, if there is a correction of prior period item, okay, then you have to restate your comparative, considering what should be the right presentation. And you are also required to provide the opening balance sheet of the comparative period to correct the opening balances of the comparative period. And what you are required to do, you have to correct from the date of the error till the opening date of the comparative. You have to correct the error You have to correct the error, and you have to what? You have to take the impact of the error in the opening balance sheet. This is how your opening balance sheet got corrected, your comparative got restated and corrected, and current year, of course, you will correct. Okay. So in your Ind AS and IFRS, the treatment is quite stringent, right? Where the retrospective calculation and retrospective application is required. Are you clear on this? Are you clear on this? Yes or no?
Yes, sir.
Very much? Very much clear?
Very much clear, sir. After having all the illustration and examples.
Yes. So friends, let me show you the Adani Enterprises, the real world big listed company. The statement of profit and loss, income, expenses, profit before exceptional item and tax. And you can see only exceptional item. There is nothing called as extraordinary or prior period. Profit before tax, then there is a tax expense. In the tax expense, there is a current tax and deferred tax. Then there is a profit for the year. This profit for the year, where this profit for the year will go? This profit for the year will go to the retained earnings. Let me show you the retained earnings. 720.70 crores. Can you see this 720.70 crores profit for the year? Retained earnings.
Yes, sir.
Can you see this? Yeah. Now, let's come to the concept of other comprehensive income. The part 2 is other comprehensive income. Sir, what is that other comprehensive income? What is that other comprehensive income? Friends, other comprehensive income is nothing. It's a extended version of the P&L. It's a extended version of the P&L. It's a separate section of the P&L. Please write down. Other comprehensive income is an extended version of the profit and loss. It's the statement of the profit and loss. Other comprehensive income is the extended version of statement of profit and loss. Right? Okay. Then please write down. It's an extended version of the statement of profit and loss. Other comprehensive income is a separate section in which the items are generally non-cash in nature, notional in nature. And what is the concept of this other comprehensive income? Let me tell you. Okay. The presentation format is given in Schedule 3 and the guidance is given in Ind AS 1. And friends, this other comprehensive income it does not mean only income. It also covers expenses. Right? So expenses has to be negative. It also covers expenses. Other comprehensive income. Right? Friends, this other comprehensive income, what is the concept of this other comprehensive income? Let me tell you with help of an example, right? Friends, you understand income and expense? You understand income and expense?
Yes, sir.
You know what is the definition of income and expense? The definition of income and expense is income are those items. Income are those items which is resulting in increase in net assets. So the definition of income is increase in net assets. Increase in net assets due to a transaction happening with party other than the shareholder. So income is increase in net assets due to a transaction happening with non-shareholders other than shareholders. मतलब अगर आपकी नेट एसेट्स बढ़ती है और कब बढ़ती है? शेयर होल्डर के अलावा अगर आप किसी पार्टी के साथ ट्रांजैक्शन करते हैं, शेयर होल्डर के अलावा अगर आप किसी पार्टी के साथ ट्रांजैक्शन करते हैं और उससे अगर आपकी नेट एसेट्स बढ़ती है तो इसका मतलब होता है इनकम. Likewise, if there is a decrease in net assets due to a transaction happening with the party who is not a shareholder, then it is known as an expense. अगर आपकी नेट एसेट्स गिरती है, कब गिरती है? जब आप कोई ट्रांजैक्शन करते हैं उस पार्टी के साथ जो कि आपका शेयर होल्डर नहीं है, दिस इज नॉन एज एन एक्सपेंस। ये आपका डेफिनेशन है इनकम और एक्सपेंस का।
Sir, also increase in expenses also, it will increase in liabilities also, it's expenses, right?
So net assets, what is a net assets? Net assets means net assets is equal to, so net assets is equal to your net assets is equal to, just a minute, yes, let me write down here. Net assets is equal to assets minus liabilities. Okay? Yeah? नेट एसेट्स का मतलब ही एसेट्स माइनस लाइबिलिटीज होता है। सो नेट एसेट्स का मतलब होता है शेयर होल्डर फंड्स। नेट एसेट्स मीन शेयर होल्डर फंड्स, इक्विटी शेयर कैपिटल प्लस अदर इक्विटी। सो व्हेन योर नेट एसेट्स इज इंक्रीजिंग ड्यू टू अ ट्रांजैक्शन which you are doing with the parties who are not your shareholder, it is an income. When your net assets is decreasing by doing a transaction with the party who is not your shareholder, it is your expense. Have you understood the definition? Have
Yes,
you
sir.
understood the definition? Now, let me give you an example. Let me give you an example. Payment of dividend. Payment of dividend. By paying a dividend, whether your net assets will increase or net assets will decrease. जब आप डिविडेंड पे करोगे तो आपका एसेट्स चले जाएंगे ना किताबों से।
Decrease.
Yeah, asset will definitely decrease. Our cash will go, our bank account will get reduced.
हाँ, बैंक will reduce ना, so your net assets will decrease ना.
Yes, sir, net asset will decrease.
And this transaction is with shareholder or other than shareholder?
shareholder.
This is for shareholders.
This transaction is with shareholder. So, is it an income or is it an expense? Is it meeting the definition of an expense?
No, sir, it's not meeting.
It should not be with the shareholder. It is not meeting, right? So where this
Yes, sir.
payment of dividend, where this payment of dividend will go? It will go to
Equity.
equity. It will go to the retained. It will go to the statement of changes in equity, right? It will go to the statement of changes in equity, right? Where in the statement of changes in equity? It will directly go to the statement of changes in equity, dividend on equity shares, right? Likewise, it will go to the statement of changes in equity directly. Okay. Now, right issue. The company has made a right issue. By making a right issue, whether the net assets will increase or decrease by making a right issue. Increase. Right issue होगा तो increase होगी ना, पैसा आएगा. Increase. But whether this is an income, to whom you make a right issue, to whom you will give the shares, to the shareholder. So it is not meeting the definition of income. It will directly go to the statement of changes in equity. It will add your share capital, right? Now, revaluation surplus on fixed asset, revaluation surplus on property, plant and equipment, revaluation surplus on property, plant and equipment. By having a revaluation surplus, your net assets will increase or decrease?
It will increase, sir.
It will increase, sir.
Whether it is a transaction with shareholder?
It's other than shareholder.
Other than shareholder, it is not with the shareholder. It is a market-based fair value. It is a market-based transaction. It is not with the shareholder. Is it meeting the definition of income? Yes or no?
Yes.
Yes,
It
sir.
is meeting the definition of income. So where should I take it? Should I take it as other income? And should I take it into the retained earnings? Should I distribute the dividend on this notional amount? क्या कहते हो?
It will be part of other income, sir.
Other income, ये जो revenue from operation के नीचे है.
Yes. Yes, sir.
Guys, just think about revaluation surplus. Will you take this in other income? Answer is no. But आपको ये income है तो कहाँ लेना है? Profit and loss में तो आएगी. तो statement of profit and loss में कहाँ आएगी? It has to be part of other comprehensive income, separate section. Right? That is why the concept of other comprehensive income come into picture, so that the companies will not be able to create an excess. The company will not be able to manipulate the accounts. The company will do the bogus fair valuation of fixed asset, right? take the revaluation surplus in other income and convert it into the profit and distribute the dividend to the promoter. उसके लिए क्या किया? इनकम तो है, तो इनकम में तो कहां जाएगी? अदर कॉम्प्रिहेंसिव इनकम में जाएगी. दैट इज व्हाई माय डियर फ्रेंड्स, the dividend is not allowed to be distributed on the other comprehensive income items. The dividend is only allowed to be distributed on profit after tax. The earning per share is also computed not on the profit after tax plus other comprehensive income. It is also computed only on the profit after tax. EPS भी आप profit after tax पे दिखाते हो. Your profit after tax plus other comprehensive income is known as a total comprehensive income, but your earning per share is computed only on profit after tax, not on the total comprehensive income. Is that clear or not clear?
Yes, clear, sir.
So इन्हीं चीजों
Yes,
को
clear.
रोकने के लिए अदर कॉम्प्रिहेंसिव इनकम का सेक्शन बनाया गया. और अदर कॉम्प्रिहेंसिव इनकम के सेक्शन में देर आर 8-9 आइटम्स. इट इज डिफाइंड इन Ind AS 1, इट इज डिफाइंड इन शेड्यूल 3. वो जस्ट आपको 8-9 आइटम रटने हैं, आपको 8-9 आइटम पढ़ने हैं, राइट? एंड यू विल बी एबल टू अंडरस्टैंड ऑल दोस 8-9 आइटम्स when we will take you through in those particular standard. For example, when we will explain Ind AS 16 property, plant and equipment, we will tell you about the treatment of revaluation surplus. Okay, is that clear? But to cut a long story short, this revaluation surplus on fixed asset will become part of other comprehensive income. Second example, foreign currency translation reserve. You understand foreign currency translation reserve? When you are consolidating your subsidiary financial statement and that subsidiary financial statement is into foreign currency,
Yes, sir.
you will apply the exchange rate. Okay, then there is a foreign currency gain or foreign currency loss. So this you are showing as a foreign currency translation reserve. Earlier in accounting standard, directly it goes to the reserves and surplus. Revaluation surplus was also going to the reserves and surplus, right? But what about Ind AS? Again, this foreign currency translation reserve, for example, it is negative. Negative matlab the dollar become expensive, rupee become cheaper, then you have a losses. So tell me, on this foreign currency translation reserve, your net assets will decrease or increase? In my example, it will decrease. Increase भी हो सकती है, decrease भी हो सकती है. तो यहां पर decrease होगी, increase होगी, it will decrease. But whether this FCTR transaction is with the shareholder, shareholder के साथ है.
No, it is other
Right.
than shareholder, sir.
So whether it is meeting the definition of expense.
Yes, it is meeting.
Yes.
So should I show it in the part 1 of the P&L, normal P&L? Should I show it other expenses, this foreign currency translation reserve?
Yes, sir.
No, no, sir. It
will be
should
part
be
of
on
other
OCI.
comprehensive.
So it is part of the P&L but not part 1 of the P&L, guys. तभी तो मैंने पार्ट 1 पार्ट 2 बनाया है. ये कहां जाएगा? ये पार्ट 2 ऑफ द P&L भी P&L का ही पार्ट है. Other comprehensive income is a section of P&L, statement of profit and loss. So Ind AS 21 says that foreign currency translation reserve नाम ही रिजर्व है. It will go to other comprehensive income, right? Notional है ना, नॉन कैश है ना. तो ऐसे ऐसे आपके 8-9 आइटम हैं, ये कहां जाएंगे? अदर कॉम्प्रिहेंसिव इनकम में जाएंगे. यू हैव टू लर्न दोज आइटम्स एंड यू विल बी एबल टू नो more about those items when we will take you through different multiple standards. Okay, friends, this other comprehensive income section has been bifurcated into 2 parts. Item that will be subsequently reclassified to P&L, item that will not be subsequently reclassified to P&L. What does it mean? Friends, Ind AS 21 says that, for example, so the time when you are consolidating, आप हर साल क्या करते हो? अपना consolidated financial statement बनाते हो हर साल. Every year you are preparing your consolidated financial statement, yes or no?
Yes, sir.
On the every reporting date. So if you have a foreign subsidiary, every year you are consolidating the foreign subsidiary. So every year you will have a foreign exchange gain or foreign exchange loss, and with that foreign exchange gain or loss, you will create a foreign currency translation reserve, and there will be a separate OCI reserve. And you know, this profit goes to retained earning. ये profit कहाँ चला जाता है? Retained earning में. और other comprehensive कहाँ जाता है? Separately as a OCI reserve in the statement of changes in equity. क्लियर है ना? ये दोनों कहां जाएंगे? ये दोनों जाएंगे स्टेटमेंट ऑफ चेंजेस इन इक्विटी में जाएंगे. रिटेन्ड अर्निंग, प्रॉफिट रिटेन्ड अर्निंग का पार्ट बन जाएगा, और ये जो अदर कॉम्प्रिहेंसिव इनकम है ओसीआई रिजर्व सेपरेटली चला जाएगा स्टेटमेंट ऑफ चेंजेस इन इक्विटी में. आई होप इट इज क्लियर टू एवरीवन. Yes. Okay. So friends, every year the company was consolidating foreign subsidiary. The company was creating a foreign currency translation reserve. There is an amount sitting in the foreign currency translation reserve. Now, the company has sold that foreign subsidiary. If the company has sold, will the company consolidate further? Yeah? No? No. So, what company will do with that foreign currency translation reserve which is lying on that foreign subsidiary which has been sold out? क्या करेंगे?
Shown in the part 1.
So it has to be recycled. So item that will be subsequently reclassified to part 1 means when this subsidiary will be disposed of, then what happens? Whatever foreign currency translation reserve is there, it will go to part 1. It becomes distributable now. It goes to part 1, right? From part 2, from OCI, it goes to part 1, right? It is realizable. It becomes a realizable reserve. Is that clear? So at the time of disposal, the OCI will be recognized in P&L part 1. This is a balance sheet to P&L transaction. The amount of FCTR was sitting in reserves. So from reserves, it go to part 1. OCI debit, credit, P&L. Okay. P&L means like any relevant item, for example, foreign exchange loss or gain in the part 1 of the P&L. Item that will not be subsequently reclassified to P&L means, for example, Ind AS 16 says that the company has done the revaluation of fixed asset. There was a revaluation surplus. It goes to OCI. And the asset on which the revaluation surplus was there, the company has sold that asset in future. So now the company has actually sold that asset. So where that revaluation surplus will go? This was part of OCI reserve and this was part of reserves and surplus, other equity. So where this will go now? So standard says that at the time of disposal, the OCI will recognize directly in the retained earnings. It will be a balance sheet to balance sheet entry. OCI reserve account debit to retained earning account. तो उसका मूवमेंट कहां दिखेगा? स्टेटमेंट ऑफ चेंजेस इन इक्विटी में डायरेक्टली दिखेगा. So these are the two sections of other comprehensive income. Item that will subsequently reclassified to P&L, item that will not be subsequently reclassified to P&L. Subsequent reclassification का मतलब होता है at the time of disposal. At the time of disposal, right? Or not subsequently reclassified to P&L matlab it will move from part 2 to part 1. And not subsequently reclassified to P&L means it will be directly moved to the retained earnings. Not through the P&L, it will be balance sheet to balance sheet entry. Friends, this the total is known as other comprehensive income, and profit after tax plus other comprehensive income is known as a total comprehensive income. It is known as a total comprehensive income. I hope this is clear to all of you. It is known as a total comprehensive income, right? And friends, the earning per share is required to be computed only on the profit after tax, not on the total comprehensive income. So what is TCI? TCI is equal to PAT plus OCI, profit after tax plus other comprehensive income. I hope this concept is clear to all of you, friends. You will not find much explanation from, I can guarantee you. So you will not find much explanation from the teachers, right, who are teaching on private classes, right? Because this OCI explanation is not there in public domains, right? There is very limited guidance on OCI, but this I was able to tell you just because of research which I have done for my books, right? So friends, this is all what I have explained you. This is all what is written here. Okay. Yes. Yeah. So this component of OCI I have given you for your reference. Item that will not be reclassified to P&L and item that will be reclassified to P&L with the Ind AS referencing also. These items you will be able to understand when you will have a session on those respective Ind AS. But the concept of OCI, have you been able to understand the concept of OCI or not? Please tell me.
Yes, sir. Clear, sir.
Yeah, clear to everyone.
Yes, sir. Very
In
much.
your, if I'll show you the listed company statement of profit and loss, you can see profit for the year, other comprehensive income, total comprehensive income, right? This is what it is there. Now coming to the statement of changes in equity, very simple. What is statement of changes in equity? It's a movement in equity share capital and reserves and surplus, which is known as a other equity, right? Movement, reconciliation. I have shown you the statement of changes in equity in the last class also. So on the face of the format is given in schedule 3, and Ind AS 1 says that on the face for each component of equity, a reconciliation between carrying amount at the beginning and at the end has to be given. Retained earning, opening retained earning, profit for the year, dividend distributed, closing retained earning. So the reconciliation for every reserves and surplus has to be given, right? Also in the statement or in the notes, whatever is the capital transaction with owners, movement in accumulated profit, movement in capital reserves, all these aspects requires to be given. Are you clear on the statement of changes in equity? Is it clear to everyone? Yes or no? Cash flow statement of cash flows. What about statement of cash flows? You need to refer Ind AS 7 for statement of cash flow. Ind AS 1 is silent on statement of cash flow. It says that you need to please go to Ind AS 7, right? Notes to accounts. It is such a meticulous standard. It also talks about the presentation of notes to accounts. You know what it says? It says that the notes shall present information about the basis of preparation of the financial statement and the specific accounting policies. It says that in your notes to accounts, the basis of preparation and the specific accounting policies both needs to be covered. Both needs to be covered. Right? करते थे हम पहले भी करते थे ना. You are providing basis of preparation. You are providing accounting policies also. In Ind AS, is it a significant accounting policy or is it a material accounting policy? What is the word in Ind AS? What is the word in Ind AS? So Geet is saying it's a material accounting policy information. You are right. So friends, in accounting standard, the word is significant accounting policy, but in Ind AS, you have to give material accounting policy information. Material accounting policy information. Second, disclose the information required by Ind AS that is not presented elsewhere in the financial statement. What are those disclosures? What are those information which is not there in balance sheet, P&L, cash flow, and statement of changes in equity? Those disclosure are also required to be made. What are those disclosure? Related party disclosure. You are right.
Yes.
Yes.
Contingent liabilities.
Contingent liability, capital commitment, related party disclosure, then segment reporting. You're right, Sanjay. Contingent liability, segment reporting. So these are the disclosure which you have to provide, which are not provided in any of the component of the financial statement. Third, you need to provide the information which is not presented elsewhere in the financial statement, but relevant to an understanding of any of them. What kind of information? Like your property, plant and equipment. In balance sheet, what you got? There is single line item on the balance sheet, which is net block. Net block of the property, plant and equipment, right? तो क्या है? Net block है ना balance sheet के face पे. Cost minus accumulated depreciation, correct? Yes or no? Yes or no?
Yes, sir.
So, but as a user of the financial statement, when you are looking at your PP net block on the face of the balance sheet is increased by 1 crore rupees, is it sufficient information? This information is not sufficient. You want to understand what is the gross block, what is the accumulated depreciation, is there any addition or deletion of the fixed asset, right? What are the class of asset, how many land and building is there, what are the furniture and fixtures, right? So basically you want to know all this information as a user of the financial statement. अदरवाइज क्या नेट ब्लॉक को देखकर आप पता कर सकते हो कंपनी का फिक्स एसेट्स बढ़ा है या घटा है? Will you be able to find whether there is an addition or deletion of fixed asset by looking at the net block of the fixed asset? Answer is no. Answer is no. Why? Because the net block is gross block minus accumulated depreciation. Okay. So you'll not be able to know. Probably if your depreciation is higher, so whatever you have done the addition, even after the addition, your net block will become lower. Right? So friends, again, this breakup, the class of asset, these are the relevant item. If your property, plant and equipment, the company has a factory and the factory has placed with the bank, the paper of the factory has been placed with the bank for the purpose of taking a loan. Friends, don't you think this is an important information which the user of the financial statement should be aware of? Yes, it is relevant for them and hence it is required to be disclosed. So provide information like balance sheet, P&L breakups or any other relevant information which is relevant to them for their understanding. Friends, Ind AS also says that you have to provide this information in a systematic manner and the cross-referencing has to be given. The first item you have to give as a statement of compliance. Which statement of compliance? Which statement of compliance? Explicit and unreserved statement of compliance. ये मैंने आपको बताया है नहीं बताया? ये सुना सुना लग रहा है, सुना सुना लग रहा है? Is it something which is heard or is it something which is blank?
Yes, sir. This is discussed on the initial of this today meeting.
Yes. We have discussed this. Summary of material accounting policy. Then instead of significant accounting policy, you have to give material accounting policy. Then you have to provide the supporting information of balance sheet and profit and loss. Right? वो दिखाते हैं ना हम. You must have seen na all these balance sheet and P&L related notes in the sequencing order. 3, 4, 5, 6, 7, 8, 9 notes to accounts. And in these notes to accounts, the detailed breakups are given. Yes? Yeah? So then you have to give the supporting information. Then you have to give the other disclosure. What other disclosures? Actuarial valuation, segment reporting, related party, capital commitment, contingent liability. All these disclosures are required to be given. Yes. Friends, now coming to the other disclosures. If I talk about the other disclosures, there is a critical management judgments and there are critical estimates. Okay, friends, when you look at your balance sheet, all the number in your balance sheet are actual and accurate number or few line items are estimated numbers.
It's not accurate number, sir. We have the estimation as well.
Friends, property, plant and equipment number in your balance sheet, is it an accurate number? Is it an actual number or is it an estimated number?
Estimated.
Why?
So if it is
Estimated.
if it is a cost model, then it is a accurate number. If it is a revaluation model, it's the estimated amount.
Okay. So those who are saying estimated, why you are saying estimated?
Sir, because we charge depreciation and that is an estimation only.
Absolutely right. Doesn't matter it is a cost model or revaluation model. Doesn't matter. Even in cost model, you are presenting your PP on the net block. Means cost minus accumulated depreciation minus accumulated impairment losses. What is a depreciation? You are charging depreciation on the basis of estimated life, on the basis of remaining residual estimated life. So depreciation is an estimate and hence this net block will become an estimated number. But if I talk about gross block, it is an accurate number because this is what you have paid for. Right? So PP net block is an estimated number. Provision for gratuity, is it an estimated number or actual number?
It is exactly the estimated number, sir.
Provision for leave encashment, estimate. Provision for asset retirement obligation, estimate. Your inventory number, cost or NRV, whichever is lower. If your inventory is on net realizable value, is it an estimate or is it a accurate number? Estimate. What is
It's
net
a
realizable
estimate.
value? What is net realizable value? Net realizable value is estimated selling price minus estimated cost of completion minus estimated cost of sale. It's an estimate. So friends, in your balance sheet is not full of accuracy. Your balance sheet is also, it's a mix of accuracy and the best estimate and judgment. Right? Friends, in our accounting policy, we are providing accounting policy for accounting of those items, but we were not calling about the estimate, that what sort of estimate and judgments which we have taken. Right? As an estimate, we are only presenting the useful life of the fixed asset or intangible asset. Yes or no? In our accounting standard world.
Yes, sir.
But in Ind AS, there is a requirement. Ind AS 1 says that in addition to accounting policy, you have to provide the significant judgment and estimates also. Right? And let me show you in this balance sheet, it is very well explained. Let me show you. These are the notes to accounts. This is use of estimates and judgments. Significant estimate and assumptions are required in particular for. So before accounting policy, this Adani Enterprises Limited balance sheet has given that how this company has arrived at estimate and judgments. Okay, how this company has arrived and in which areas the estimate and judgments have been applied. Useful life of property, plant and equipment and intangible assets. Impairment of non-financial asset. Taxes. Fair value measurement of financial instruments. Defined benefit plan gratuity, inventory measurement, determination of lease term and discount rate, asset retirement obligation, recognition and measurement of contingent liability provision and uncertain tax positions, right? So they have given the estimate and judgments in all these areas, they have clarified that. And then they have given the accounting policies. So this is an old annual report. That is why the word is significant. This annual report is for FY 21-22. So from 23-24, the word has been changed to material accounting policy, right? But have you understood this use of estimate and judgment, the disclosure of estimate and judgment in addition to accounting policy? Yeah. After looking at this real life example, is it clear to all of you? Is it clear to all of you? Yes or no?
Yes,
And
sir.
Yes, sir. Very clear, sir.
So the company has to disclose all this critical management judgment and estimate, and the company has to give the capital management policies also. What is the capital management policies? So capital management policies means the company has to provide a disclosure in the notes to accounts. What is the capital structure? How the company is improving the wealth of the shareholder, right? By way of buyback, by way of dividend. What is the strategy for capital allocation? So these kind of disclosures are required in Ind AS financial statement, which was not required earlier. Indian presentation of Ind AS financial statement we have discussed. Division 2 to Schedule 3, which was notified on April 6, 2016. This talks about your presentation format for the balance sheet, P&L, statement of changes in equity, and the disclosures in the notes to accounts. Comparison between Ind AS and accounting standard. Let me give you the comparison also, friends. The applicable guidance is Ind AS 1 and Ind AS. In accounting standard, it is AS 1. Okay. SOCI. Whether SOCI is required in Ind AS, answer is yes. Whether SOCI is required in ICAI, answer is no. It is not a separate component, but it is required in the notes to accounts, right? Notes to accounts में दिखाना होता है ना या नहीं होता? In notes to accounts, is it required or not required? In notes to accounts. Accounting standard में दिखाना होता नहीं दिखाना होता? It is required in the notes to accounts. In the notes to accounts, it is required. Okay. In accounting standard, but in Ind AS, it is a separate component on the face of the financial statement, and it is signed by the board of director and the statutory auditor. OCI, whether concept of OCI was there in accounting standard?
No, sir, not there, sir.
Yeah, was it there? It was not there. Okay, it was not there. So it was not there. but in Ind AS it is there. Whether extraordinary item, whether this concept was there in accounting standard, extraordinary item.
Yes, it was.
It was there, but in Ind AS it is there? No, in Ind AS it is prohibited. A statement of compliance, whether it was required in IGAP, no such requirement. But in Ind AS it is a mandatory requirement. Explicit and unreserved statement of compliance. Key sources of uncertainty, estimate, judgment, is it required in IGAP? Answer is no. It is required to be disclosed in Ind AS. Okay. Judgments and key sources of uncertainty. Third balance sheet. Whether third balance sheet concept was there in IGAP? No. Is it there in Ind AS? Answer is yes. In IGAP, whenever there is a change in accounting policy or correction of error, the impact has to be taken in the current year and disclosed in the notes to accounts. But in Ind AS, there is a retrospective calculation and retrospective application, right? So, and hence third balance sheet is required. What is third balance sheet? Opening of the comparative period balance sheet. Right. So, thank you so much, friends. We have completed this Ind AS 1, and let's discuss. If you have any question relating to Ind AS 1, let's discuss for another 5 minutes. Please let me know if you have any question on Ind AS 1. It was a kind of a theoretical but practical also, right? This standard. And a lot of concepts were there. We have covered the entire Ind AS 1. We have covered the division 2 to schedule 3, right? And I've told you about the format of the financial statement. I've told you the general feature of the financial statement, then structure and content, current and non-current asset, current liability, non-current liability. We discuss all these concepts, right? Any question? Any question? Any feedback about the class? So anyone who wanted to give the feedback of the class, Priya, you wanted to give? Priya? Ankit?
Yes, sir. Classes are going very well. Actually, we understood very much as compared to normal classes. So I have actually done from foundation inter from VOS classes only. So this is very helpful.
Oh, nice. You are used to it, means.
Yes, sir. And your teaching style is really very good, sir.
Thank you. Thank you. Anyone who want to give any feedback?
Sir, really the 3 hours is gone, just 3 minutes. I would say actually the kind of the explanation and discussing the concept and where there is a difficult situation, the concept also you are giving the example in such a way that the student can understand, and really amazing, sir.
Oh, nice. So Geet
Thank
is
you
also
so
saying,
much.
thank you. Geet is also saying he did. So he did see inter May 23 attempt from Board of Studies. Great. So love to see that many of you are used to do this Board of Studies classes. Great. So thank you so much. Wish you all the best. Have a great day ahead, and we'll meet in the next class. Thank you so much. Bye bye. Take care.
Thank you, sir. Bye. Have a wonderful day.
Thank you. Yeah, session is over. Thank you.
Recording stopped.